Good morning, good afternoon, and good evening, and welcome to the GBBC's 4th Annual Blockchain Central alongside the United Nations General Assembly. My name is Sophia Ahrens, and I'm the Global Blockchain Business Council's Communications and Content Lead, and it's my pleasure to welcome you to day one of our programming. We are proud to be an official partner of the UN Foundation's Global Goals Week and to bring you an array of programming focused on the role of technology and community in accelerating the United Nations Sustainable Development Goals. Today is day one of the event, and day two will take place tomorrow. You can find the agenda linked in the chat. We will kick off with a series of programming organized in partnership with Global Digital Finance. And without further ado, I will hand things off to our first speaker, Lawrence Wintermeyer, Executive Director of Global Digital Finance and GBBC Ambassador to the UK. Thank
you. Well, thank you very much, Sophia. I'm Lawrence Wintermeyer, the Executive Co-Chair of Global Digital Finance, the not-for-profit Global Members Association dedicated to delivering high public industry standards and codes of conduct by our members in the crypto and digital asset sector. And it's an absolute honor for me to be asked by the Global Blockchain Business Council, our partner and sister organization, to open GBBC's 4th Annual Central alongside the United Nations General Assembly number 76. So on behalf of hundreds of GBBC and GDF global members and partners, a big welcome. In the words of the UN, the theme of the UNGA 76 meetings is sweeping and urgent, building resilience through hope to recover from COVID-19, rebuild sustainability, respond to the needs of the planet, respect the rights of people, and revitalize the United Nations. And it's a reminder that we and you can choose the future that you want. The background to this year's 76th UN General Assembly is a world that feels fractured. And just when we need to come together against the continued ravages of COVID-19, we're also facing the accelerated climate emergency, unfolding humanitarian disasters, rising inequality, and much more. And so fixing it is going to take bold leadership, brave choices, and sustained commitments. And at UNGA, this means bringing together world leaders, civil society champions, young people, global business, and many others to reinforce and reinvigorate our collective determination to solve our shared problems. Now, those are very inspirational words and leadership from the UN. GBBC and GDF have convened the global blockchain, DLT, crypto, and digital assets community here during the General Assembly for a fully virtual event. And in a world that feels fractured, this community brings technology, tools, standards, experience, and as importantly, execution capability to unite and expedite the delivery of solutions to these global problems, and solutions that are of great value to society and the planet in this often divided world that we live in. So, regardless of your politics, religion, or beliefs, it's ultimately up to each of us individually to choose whether to participate in helping to unite to solve these unfolding global problems. Now, the community that we in the GBBC and GDF have convened here today is committed to uniting and expediting solutions and bringing together leaders from the government, industry, academia, and not-for-profit to discuss how we're using these emerging technologies like blockchain and digital assets to address these global crises and the UN Sustainable Development Goals. So thank you for listening to me. It was a pleasure to kick this off. Enjoy UNGA 76 and enjoy Blockchain Central. I'm Lawrence Wintermeyer, the Executive Co-Chair of Global Digital Finance, and I'll now hand you back to Sophia at GBB Central. Thank you.
Thank you so much, Lawrence, for kicking us off. We will now hear remarks from Megan Roberts, Director of Policy Planning at the UN Foundation.
Hi, I'm Megan Roberts, Director of Policy Planning at the UN Foundation, and I'm thrilled to be here to participate in Blockchain Central UNGA. It's an honor to be part of such an important event, which I know is also part of the Global Goals Week, which aims to drive action toward achieving the Sustainable Development Goals. And we at the UN Foundation work every day to advance the 17 SDGs, which together represent our blueprint for achieving a better and more sustainable future. And part of my work is to help understand the role of new technologies in advancing the goals, but also how the UN can work with others to maximize the benefits and to minimize the risks of new technologies. I know that many of you spend your days at the cutting edge of blockchain and other new technologies, so I probably can't tell you anything about how those technologies work. But what I want to share with you today is how across the UN system, new technologies are being put to work to help millions of people around the world. And at the same time, the UN is serving as a platform for actors to come together around critical conversations on new technologies and on innovation. And really across the UN system, innovators are exploring how they can leverage blockchain and other new technologies to solve long-standing development challenges. UNICEF, the UN Agency for Children, has invested in blockchain startups around the world for years. To accelerate this work, UNICEF set up its own crypto fund. The Food and Agriculture Organization, FAO, is exploring ways that blockchain can be used for food supply chains and to support climate action in agriculture. And the UN Development Program is exploring how blockchain can increase financial inclusion around the world. And it's not only blockchain, of course, from using drones to deliver life-saving vaccines to using satellites to better understand the effects of climate change. The UN is exploring how it can use new technologies to advance the SDGs and to help people around the world. And to do so, it's working in partnership with experts across all sectors: business, civil society, governments, technologists. And as the UN puts new technology and innovation to work to better deliver around the world, it's also fostering a global conversation on how we can all work together to ensure a safe and equitable digital future. Because even as we can appreciate the immense benefits, we also see that the digital transformation is not unfolding evenly. It's leaving people behind. And it's introducing new threats that our current means of cooperation are just not yet tackling. COVID has only increased these risks. As the world has become more dependent on digital technologies, still nearly half of the world is offline. The Secretary General has warned that the digital divide threatens to become the new face of inequality around the world. Our dependence on digital technologies has also left those who are online more vulnerable in the midst of a surge of cyber attacks, hacks, and online harassment. And we are experiencing what experts are calling an infodemic of COVID misinformation and disinformation. And in the midst of this global crisis, we see governments clamping down on rights and freedoms online and a growing risk of irreparable fractures in the open and global internet upon which we all depend. So we know that even as new technologies offer such incredible promise, for them to really deliver requires healthy and agile means of cooperation and setting the rules of the road. The UN is playing a leading role in creating space for exactly these types of conversations. Last year, the Secretary General launched a roadmap on digital cooperation that set out 3 priorities for the UN to work with others. First, to connect everyone to the internet by 2030. Second, to respect human rights and human agency online. And third, to protect everyone, especially the world's most vulnerable, from online harms. Issues of new technologies are increasingly on the agendas of the Security Council, which has met 3 times already this year on new tech, the Human Rights Council, and the General Assembly. And across its work on digital cooperation, the UN is working with governments, but also civil society, companies, researchers, and others to realize a positive digital future. So as we look to UN General Assembly next week, as world leaders outline their priorities and their visions for the world, we should expect that the future of technology will be a top concern. And it should be. The stakes are simply too high and the costs are too great, both in terms of opportunities lost, but also in risks to backsliding on progress that the world has achieved over the last several decades. This underscores the need to work together, an imperative that I know is really strong in the blockchain community. And it also means that there's a role for everyone. So I'm looking forward to the discussions here to see where and how we can partner together on this important work. Thank you.
Good day to everyone. I'm Rama Devi Lanka from India. I work with the government of Telangana, one of the southern states in India. Thank you for inviting us to speak at the Global Blockchain Business Council 4th Annual Blockchain Central United Nations General Assembly. Well, the topic that I'm talking about is the role of technology and community in advancing the United Nations SDGs. And I'll give you a brief overview on what we are doing in Telangana. Well, we have created a vertical for emerging technologies, and the objective is twofold. One is to develop the ecosystem required for the industry, and the other is to make the government departments leverage or adopt emerging technologies. We have identified 8 key emerging technologies such as blockchain, AI, IoT, cloud, 3D printing, and so on. You know, about 2 years back, we came up with a unique concept called the Blockchain District Initiative. It's anchored by the government of Telangana. This Blockchain District Initiative brings together different facets of the blockchain technology realm in the city of Hyderabad. We have tech companies, research organizations, academic institutions. The entire ecosystem comes together under one umbrella to work on various blockchain initiatives. The founding fathers or the members for this blockchain district initiative we have representatives from academia, from other government organizations, and from the industry. Well, blockchain is the technological enabler for accelerating sustainable development adoption. The World Economic Forum identifies, as you all know, 3 areas where blockchain could be an SDG game changer: building resilient and transparent supply chains, creating stronger and more accountable public institutions. The third one is spurring responsible sourcing and consumption. Well, in addition to these, there are other disruptors as digital currency and digital identity that are making waves. Well, when you talk about the first one, building resilient and transparent supply chains, even before the pandemic has hit us, we have identified blockchain solution to be implemented in the public distribution system, or we popularly called as PDS. Under the PDS, rice and pulses are distributed to about 28.3 million beneficiaries across 10,000 villages. And the budget allocated is also huge, around $325 million. We believe that implementing blockchain would help us to ensure food security by supplying quality food grains to the targeted beneficiaries. So we are implementing a pilot in this particular area. The second one, creating stronger and more accountable public institutions. This is very close to my heart because I've been seeing at the ground level how blockchain is helping address issues such as fraud, scams, and help build effective and accountable and inclusive institutions. Well, land record is one of the areas we have implemented blockchain solution. Bringing in single source of truth, clear land titling. A report states that by bringing in reform in land records, it could add to 2 to 3% of GDP. So we have actually implemented a pilot in land records. Another project we have implemented in the microfinance area is to provide 150,000 poor women with credit scores so that they can get loans without the need to furnish a collateral. I believe this is one step in empowering women and just the beginning of inclusion of all sections of society. Well, there are a couple of more use cases that I can actually share with you. One is a traceability of agri products. We are using blockchain to trace seeds because fake seeds are being circulated and farmers are getting cheated by these fake seeds. So that's one area. And another area that's of interesting for us is counterfeiting of drugs. It's the biggest problem in India and elsewhere in the world. That's another use case that we are actually implementing blockchain. So we have developed a roadmap, identify relevant use cases, pilot the use cases, understand the challenges and opportunities, and then go for full-scale implementation. I believe this approach would accelerate the adoption of blockchain. So Concluding, the core competencies of blockchain, providing transparency, immutability, data auditability, and privacy, will drive the governments to explore new use cases. And I believe that this would actually accelerate the sustainable development adoption and further accelerate the SDGs. Thank you.
Thanks everyone so much for joining us. We'll now hear from our first panel of the international edition produced in partnership with Global Digital Finance. This panel is on building next generation market infrastructure. I'll hand things over to our moderator, Yvette Valdez. Thank you.
Thanks, Yara. Super excited for this panel. My name's Yvette Valdez. I'm a partner at Latham & Watkins in New York, and I'm joined by an esteemed panel today, which I'm going to give them a couple of minutes to introduce themselves, and they can tell you what they've been up to. Peter Golder, Michael Coletti, Tyron Lobin, Anthony Woolley, and Marieke Van Cleef. So let's start with Peter. Peter, can you tell us a little bit about yourself and what you do?
Sure. Good morning, everybody. My name is Peter Golder. I'm the Chief Commercial Officer at SDX, and I'm very proud to announce that we've just received our license from the Swiss regulator, and we are operating a fully regulated, integrated trading, settlement, and custody infrastructure, which runs on distributed ledger technologies. Prior to that, I was a CEO of a hedge fund and ran Deutsches Islamic Structuring business. And before that, I was a strategy consultant.
Great, thanks. Michael?
Good morning, good afternoon. Michael Coletti from the London Stock Exchange Group. I run the blockchain innovation and market transformation work under the CTO of the group. And as you may be aware, London Stock Exchange Group is not just the capital market, but also the post-trade clearing business, the massive market data business after the Refinitiv organization merger, and FTSE Russell, which is basically focused on benchmarks and indices, as well as market infrastructure technology. For LSEG Group, I focus on market structure innovation and transformation. So that basically has several components, one being technology strategy for the whole group, because as we know, DLT is impacting every part of the kind of the value chain of equities and capital markets, and also a regulatory focus because we are a heavily regulated industry and there's nothing that we can't do around innovation that doesn't kind of fall within the perimeter of some type of regulation. So I kind of bring that all together. By way of background, I was originally a software developer and I've worked in market infrastructure for over 15 years, previously at the CME Group. Nice to be here this morning.
Thanks, Michael. And Tyron, who's head of blockchain launch at Onyx by JP Morgan. Tyron?
Thanks, Yvette, and hi, everyone. Great to be with you today. Yes, I'm Tyron Lobin. I run the blockchain launch team at JP Morgan. I now actually sit within a new business unit that we recently created called Onyx, which really centers around creating new products and solutions and infrastructure based on blockchain. What I do is I work with each of our businesses within JP Morgan and also our clients to really understand how we can create those new products that actually bring value. Have been in the blockchain space for about 5 or 6 years now, began in about 2015. I was also the product lead for the Quorum platform that we created, which is a fork of the Ethereum blockchain. And prior to that, I did a number of roles, both in software development and also in product management. So great to be with you all today and looking forward to the discussion.
Thanks, Tyron. And Anthony Woolley, who's head of business development at Onera. Anthony?
Yes, good morning. Thanks, Yvette, and absolute pleasure to be on the panel today here from London. So yes, I'm the head of business development for Onera. I'm also the co-chair of the GDF Private Markets Digitization Steering Group, and I think you heard at the opening from Lawrence Wintermeyer about all the good work GDF is doing with regulators and governments around the world to promote digital finance. So what we've done at Onera is brought the financial services industry together to digitize the private markets. Private markets are arguably the world's largest market that's been almost totally offline up until now. And with Onera and GDF, we're working with over 70 institutions comprising the world's largest banks, asset managers, exchanges, but also leading fintechs in the blockchain space and large international law firms. What are we doing? Together, we're deploying a global routing network called Fin P2P, Fin Peer-to-Peer. And Fin P2P enables private securities issued on different blockchain networks all over the world and different technologies to be distributed to any suitable investor globally across regulatory jurisdictions. And on FIN P2P, when an investment is made, payment is made across the network, the register of ownership of the company is updated by the transfer agent in real time, and all of this delivers real-time transactions and real-time settlement. So in short, FIN P2P and this whole initiative is solving the problem of blockchain interoperability for digital securities, and we think that will deliver the scale and liquidity that the digital markets need to be successful.
Thanks, Anthony. And we're going to talk quite a bit about that actually on the panel. Marieke Van Cleef is product development lead at EQonics. Marieke?
Thanks, Yvette, and thank you so much for inviting me today. Super excited to be here. At Equinix, I lead the development of products, so I like the design and implementation of our perpetual futures, but I'm also in charge of the features for our exchange, like the cross-collateral feature that we just launched recently. A bit more about the company. Equinix was listed on NASDAQ last year, and with that, we were actually the first listed digital asset company with a crypto exchange. Our vision is to be the bridge between traditional finance and the digital asset space. The majority of our team have come from traditional finance, so they have that experience, but they also have a strong passion for the digital asset industry. What we want to deliver, or how we want to deliver our vision, is by focusing on a few things. So firstly, there's innovation. All our products and features that we have are very well thought through. So for each and every aspect of our products, we think about what it is that we want to achieve and how we can best deliver that. But a huge focus area for us is also on transparency and investor protection, which I'm sure we can all agree is something that many people are still missing in this industry. So we want people to feel like they can get access to this industry without having to worry about the degree of investor protection or regulatory oversight that they're already used to in traditional financial services. What we are building is the full ecosystem. So if you want to trade cryptocurrencies directly, you can come onto the Equinix exchange. If you want to have the best execution, you can use our Access trading platform. Or if you want to keep your assets safe, you can use Digivault. And that's only part of our offering. So yeah, very excited to be on this panel today.
Thanks, Marieke. And before we kick off and talk to these experts, I just want to remind everybody that the views expressed here are their own views and not representative of the firm. So let's have a discussion. I mean, I think to kick off what building the next generation of market infrastructure means, I think there's a very basic question, right? Market infrastructure providers provide this critical role to the global economy. It's changing right before our eyes, from the inception of digital assets, digitization of financial instruments, to the disintermediation that we're seeing in decentralized finance. So Anthony, let's start with you. What do we mean when we say next generation market infrastructure? How's it different from what we know today?
Okay, so I spent the formative part of my career building electronic trading systems on the trade floors of the world's largest banks. And as such, I know that financial institutions around the world spend tens of billions of dollars every year upgrading their technology systems, right? They're spending that money, making them faster, more reliable, better able to manage their risk, ability to process ever larger volumes of transactions. However, that money has been spent trying to optimize an infrastructure that's still based on principles of passing messages like electronic emails between institutions that was designed back in the 1970s. So as a result, whether you're making an international payment or you're processing a complex securities transaction, it requires multiple chains of messages between multiple intermediaries, all trying to reconcile the details of the transaction, ensuring that everyone agrees on the details of it, that money's moved and settled between banks correctly, and that nobody's defaulted in that interim period. So large financial institutions that have hundreds of operations and compliance staff working behind the scenes to make this possible. And final settlement of transactions takes days, if not weeks. Okay, so we've got all of that complexity, and may I say spaghetti almost, that I have to admit I spent a lot of my career building in some of these large institutions. Next generation infrastructure looks at the financial system in a different way, right? It doesn't work on the principle of passing messages around, describing a financial contract that'll be settled later. It actually moves the money and the securities in real time based on a single immutable representation of that financial instrument. And it's distributed ledger technology such as blockchain that has made this possible. So a fantastic example of that is the FinPeace-P network we're deploying. So if you take that as an example, on FinPeace-P, we're enabling investors to invest in shares of high growth private companies and other securities that they may not previously have access to, issued on different distributed ledger and blockchain technologies, different venues around the world. Over that network, over FinPeace-P, they can see all the information they need to make an investment decision online. And when they click to invest, the network actually validates that all the regulatory permissions are in place, that that's a suitable investor to invest in that asset wherever it may be. And then the money is passed as electronic money over the network, and the transfer agents that are still in place update the record of ownership of shares in that company and settle in real time. So a transaction that in the private markets today could take weeks happens in seconds. So that's an example of next generation infrastructure.
Thanks, Anthony. And I think, so this golden source concept where we all have the same information and have access to the same information and don't have to reconcile against all of these, different books. It sounds amazing. It's what we're sort of seeing before our eyes. I guess my question would be, and I think that the audience is certainly interested, has it reached its maturity, Michael? Like, how much further can it go? Where are we in sort of the...
Yeah. Well, it's a good question.
Where are we in its lifespan?
Right, and again, when we talk about next generation market infrastructure, I think it's always important to differentiate, right, the crypto world or the DeFi world per se, right, from what you call the traditional finance world. And of course, the answer to the question kind of basically is focused on the traditional finance world for my response. And I think so. The basic, has it reached maturity? No, I think we're at the precipice, because if you're looking at, again, and I always go back to this concept, right, that fundamentally, right, what do we have? What are we doing here? What are securities? What is central bank money? It's nothing more than well understood legal structures, right, that are built, that have systems of automation built around them, right? So when we transfer ownership of an equity, right, that is done as a well understood legal structure with a system that actually moves this value around. I think it's taken us a long time to get to that point of understanding, first and foremost, because I think initially the technology and the fog of blockchain and DLT kind of, the initial upfront discussion of immediate disintermediation distracted us from what we were actually doing. So where are we on the maturity curve? Well, let's take a look at what we have around the world, first of all, just as a point of inventory. So SDX, right, as we know, just received its kind of authorization, but we are in no ways have we established a major G20 or G7 nation central bank digital currency. And I think that is kind of really one of the kind of key drivers for what's going to advance the next generation market infrastructure. In other words, we can talk about digitization of securities all day, and that involves something called the central securities depository fundamentally, but without the cash leg of a transaction, meaning central bank currency, digital currency, there is little value to having full workflow automation built in. I think the main thing to focus on, and just for the point of brevity, is that once we see the tipping point of central bank digital currencies coming out in some G7 nation, then we're going to see the transformation of the securities leg of the transaction. And we all know, right, that the bulk of the world's assets is not held in central bank money or cash for that matter, right, but it's in securities. But without the kind of two legs being digitized, we can't have, or there's no impetus for us to move to digitize the securities leg. So from a market infrastructure standpoint, such as the London Stock Exchange Group, and looking at our clients for that matter, without the value add of instantaneous settlement finality through central bank money in a digital form, why would we kind of go through a major investment in the securities leg? Even though we spent tons of time on it, we're talking about uptake here, right? What's going to actually lead to a tangible transformation? And I think what we're seeing is an example, of course, in Switzerland, and that is a very well vertically integrated country from a regulatory and market infrastructure standpoint, is exactly that. And I think it's a great blueprint for what we're about to see. So, up to this point, right, we're seeing kind of smaller networks of things like fund managers, tokenizing, digitizing certain types of assets that they handle on their individual workflows, but we're not seeing like a systemic transformation. I think we have to recognize the fundamentals of the legal underpinnings, right, that we need established before we can just digitally and simultaneously move value around, right, through systems of DLT. Because at the end of the day, right, these are just legal structures with systems that support them, and we need to show value.
I want to press that for a second because I think it's a really interesting point. And this isn't the CBDC panel, but it's all sort of interconnected.
Yeah.
Is sort of the statement that we need the CBDC to have mass adoption because of operational adoption, because we do have underlying stablecoins that, you know, that could be used. So why is that an important distinction to the stablecoins that exist today?
Yeah, so again, I go back to the example of stable coins, right? So if we think about stable coins, right, these are commercial bank deposits, right? So these are inherently have counterparty risk, and they could be in a different jurisdiction. So they're things that don't scale. So if I have a stable coin and that's deposited in some bank in even a G7 nation, I'm at the risk of that bank failing, right? And we can't be settling let's say an entire country or entire nation's markets in that kind of counterparty risk. It would concentrate risk beyond what would be reasonable. So that's why stablecoins aren't able to scale. I give the similar example of studying wind resistance of a car at 70 miles per hour versus the effects of wind resistance on a shuttle re-entering Earth at 15,000 miles per hour are very different, right? We are at the 15,000 miles per hour kind of level, right? So the space shuttle breaks up because of heat and friction, right? At 70 miles an hour, we're talking about fuel efficiency. So it's a very different scale that we're dealing with on a national, right, macroeconomic level.
Yeah.
And that's why stablecoins can't scale and solve the problems, but they do give us a blueprint for how we could do it.
In addition to the legal uncertainty that exists with stablecoins, we're watching
exactly
occurring with all of that in the US and the criticism they're under. So
it's all about counterparty risk and what's the legal structure and rights it confers upon me, the holder, right? It's that simple. And then the technology on top.
And maybe I can jump in very quickly as well, because I think the stablecoin piece is right in terms of the scalability, but it not only gives a blueprint, but it also gives a starting point for some things to happen, right? So as an example, you know, we, from the JP Morgan perspective, ended up establishing and creating JP Morgan Coin a couple of years ago, which we are now live with. And this is essentially commercial bank money with the credit risk of JP Morgan, which is, you know, arguably not very much. But what it has actually enabled us to do is, you know, actually put production solutions out there that enable DVP of, you know, settlement of securities versus cash using this form of, you know, some on-chain representation of that cash. And to your exact point, Michael, meeting the legal and regulatory requirements for doing that. But I think that at least our view is you're going to end up with a mix of commercial bank money and central bank money, and there has to be both in order to get to that scale. But what we have in absence of CBDCs is at least a starting point for us to see how these solutions can actually be established.
I also think the stablecoins themselves are developing. So yeah, maybe we started with only one stablecoin and maybe there's some scrutiny, but when you look around, there's various stablecoins now. And some probably, if you do some research, probably you think they're better than others. So it's also still something that is developing. And on top of that, there are other solutions. So when you go on Equinix, for example, actually you can keep on using your actual fiat USD because it's completely fungible for us. So I think as the market grows, we'll see probably other solutions as well.
Thanks, Mary Kay. Thanks everyone for the comments. I think we could probably sit on that question all day. But let's try to move on a little bit. Tyron, sticking with traditional market infrastructure, how are traditional market infrastructures and these incumbents adapting to the digital economy? I think you just gave us an example, but talk a little bit more about why this collaboration with the incumbents is important when it comes to DLT and the developing market infrastructure.
Yeah, well, I guess firstly from an adapting perspective, I think there's definitely been a recognition that, you know, traditional market infrastructure providers can't sit on the sidelines because I think they will end up being sidelined. And so what we've actually seen, you know, really for the last 5 or so years is a lot of quite meaningful forays into how blockchain can be used. We've seen early stage projects through ASX and DTCC in 2016 around how they could upgrade and uplift their traditional infrastructure, but now leveraging new technology. So I think that's the first thing, is a recognition that there is something here to do. I think the second thing is that what we're seeing is really a focus on forming strategic partnerships and making strategic investments, right? You're seeing not only traditional market infrastructure providers investing and partnering with startups, but also with each other, trying to create cross-jurisdictional solutions. And the partnerships that they are actually establishing and the investments that they are making are really across the spectrum, from custody-like solutions and KMS solutions to market data providers and even debt issuance providers as well. I think there is a recognition that in order to adapt and move forward, there is a need to partner. So I think that's been an important sort of function that we've seen. But I think equally importantly is the continued experimentation and the continued conducting of different pilots. But now what we're seeing is those are moving beyond pilots and actually into these production stages. And what that is ultimately leading to is a recognition that there are new opportunities and new markets. We're seeing market infrastructure providers actually tackle entirely new markets that they haven't been and asset classes that they haven't traditionally provided. So I think the adaptation to this technology is actually quite obvious and really prolific when I think about how much activity there has been in the space. But on the point of collaboration, I mean, firstly, obviously this technology, blockchain, requires collaboration. So I think that's a fundamental thing that we are seeing. But secondly, when you think about market infrastructure providers that are typically systemically important, they can't necessarily just upend all of their internal systems and processes overnight when they're processing hundreds of millions or even trillions of dollars of value. So the collaboration is important when we think about how traditional providers and new incumbents can actually look to solve those problems by leveraging each of their kind of respective strengths, right? On the startup / new incumbent or new provider spectrum, you have the ability to move quickly, and the space, as we all know, moves incredibly quickly. Whilst on the traditional space and the traditional provider side, you have stability and trust and certainty, and sort of, I think, combining those two things is actually really important. And I think that's what we're seeing from a collaboration perspective in any case.
Thanks. And do you want to speak for a second about the projects that you've been working on at JP Morgan?
Yeah, absolutely. I mean, so again, we actually launched this entirely new business unit in back end of last year now. So it's called Onyx by JP Morgan. And really what Onyx is, well, one, it's our kind of statement to say we really fundamentally believe that this technology is here not only here to stay, but is going to be really important going forward. So we've created this entirely new unit where we have 150 plus people dedicated solely to creating new products, new platforms, and new infrastructures that leverage blockchain. And this came off the back of us sort of working out, how to create global networks, global networks that can actually scale. One example of this is in 2018, we launched a network called Link, which now has about 400 banks globally on this platform that are exchanging, literally hundreds of thousands of messages each day as it relates to payments information. So we kind of realized that we have this ability to establish these networks, establish these very important infrastructures really that can be useful and used. I spoke about the JP Morgan Coin initiative that we started, and that was actually created off the back of work that we did also around the same time, where we actually looked to tokenize debt issuance. So, basically doing a bond issuance on blockchain. And to Michael's earlier point, we very quickly realized that if you don't have some form of on-chain cash, you're never going to get to the sort of, the DVP solution that you actually want to get to. And so that actually led to us creating JP Morgan Coin, which is now a fully regulated, essentially a bank account on a blockchain is basically what it is. And then last year, we actually launched our third production network, which is called Onyx Digital Assets. And this is really a generalized tokenization platform that enables any kind of assets to be tokenized. But it has, the JP Morgan coin capabilities built in. So we have this ability to actually provide these DVP solutions. And one of the first applications that we launched was an intraday repo product. Now, repo, as some might know, is obviously a very, very important financial instrument. Most of the world's financing happens through repo transactions, but they are typically settled overnight or, a term, 2 weeks or something like that. And what we sought to do was actually provide an intraday repo where you could borrow funds and put up collateral and actually get those, or return those funds and get that collateral back within the same day. So you can, say I want to borrow $1 billion for 3 hours, and now you can do that on a secured basis. And this is actually meeting a specific demand and need that our clients have when they're trying to meet their own intraday liquidity. So being able to tokenize cash and being able to tokenize securities on these platforms has actually really showed the power of blockchain and the ability to actually move to these new models where, as Anthony says, you don't have all this post-trade processing happening in disparate systems. The actual asset itself and the tokens themselves are encapsulating all of the business logic and the post-trade processing as well. Yeah. So, hugely excited about this work. And I think we're just going to see more of this coming. And I think more interconnectedness between these new market infrastructures as they're being created.
Absolutely. So, Peter, we hear Tyron speaking of all of the ways that I think the traditional market are really changing and potentially some handicaps they have to adoption. Crypto, I'm not necessarily sure really has the same issues with respect to dealing with incumbent systems, right? And sort of slow to adopt because of those incumbent systems. But talk a little bit about the challenges that crypto market infrastructure is facing, and potentially, some of the strengths and the values that'll help see through those challenges.
Sure, I think it's important to give a bit of background and context. Most of crypto actually started, as we know, on the retail side. So very different starting point. It has seen rapid growth, a lot of it in markets that traditionally didn't have infrastructure built up to the way that we probably know it or would expect it. It's the opportunity to quantum leap some of that. We've seen that before in emerging markets and PISA, for instance, payment systems. I think the notion of an exchange, the way we know it, is also not well established. Different exchanges, different regulatory environments. And I think most people want exposure. And the question is, do you do that via spot or via derivatives? Spot well developed. On the derivative side, there's certainly more opportunity. So I think that's kind of important, just sort of put that out there as a starting point. And then when you look at crypto as an idiosyncratic asset, it's not like there is one global market. The crypto markets are very fragmented. When you, for instance, compare NASDAQ and NYSE, they have each about 25% of global equity trading volume, whereas Coinbase, this is dating back to February, has approximately 2.1% of cross crypto asset classes. So it just gives you a bit of sense how big these markets are and the stage at which they are. So what it means from an institutional perspective is that it's very difficult to access global trading markets in one go because they're so fragmented. It's difficult to do cross-border or cross-exchange price discovery. And it's very difficult to do global best price calculations, accessing global liquidity the way that an institutional investor probably would want to do that. And on top of that, what we're also seeing is there are a whole bunch of new concepts. We talked about stable coins, we talked about smart contracts, decentralized versus centralized. We have AMMs, DAOs, etc. All new concepts that all play into this concept of market infrastructure on the crypto side as well. And when you then compare that with traditional financial market infrastructure, I sort of call that FMI versus DMI, digital market infrastructure, we also see a whole bunch of different paradigms. Blockchain settlement is different from traditional settlement, probabilistic versus deterministic, for instance. And we have a whole bunch of pieces missing or in different stages of evolution. We talked about CBDC. There's clearly a need for more regulation, or there will be more regulation, depending on which way you want to look at that. But at the same time, when you look across where we are, traditional markets, crypto markets, some people look at this and say there are differences or problems, but it's very much a question of how you look at that. So the differences and the problems are somebody else's opportunities. So if you look at crypto hedge funds, year-to-date performance is about 145% up. And when you look at what you have very pronounced in crypto markets, it's two things: volatility and at present inefficiencies. But those are exactly sources of alpha or the inputs for alpha generation. So it's very much a question of where you are, and that will change. I mean, this is all in flight, and that will change. And what I see over time is that there will be a convergence between traditional market infrastructure and, let's say, crypto market infrastructure, DeFi, because what people want, certainly on the institutional side, are capital efficient business models. So you will probably have a cross asset class convergence, so public listed markets, crypto and private, more illiquid markets. And then you will also have a convergence between DeFi and CeFi over time, so that by the time we're done, you probably will have a bunch of different hubs where you can do cross asset class trading, clearing and settlement in a very sort of efficient way. I think that's sort of the direction of travel, but very different starting points.
This concept of sort of interoperability, right? And also the maturing of these different market infrastructures from crypto to traditional financial instruments in their own silos coming together, I think it's something that folks have been talking about and certainly see we have, past examples of that. Anthony, I'd be interested in sort of your thoughts from your angle in particular, where you sit at Onera as to the importance of that, what you see the trajectory of that convergence and frankly, where the efficiencies and where the opportunities are.
Yes, thank you. I mean, the first thing I would say is, right, all this tremendous energy and money we see going into this space has led to different initiatives, different approaches and solutions. And that's important and inevitable and a necessary path of innovation, right? It's desirable. If we try to get everybody to sit down and agree a common approach, a single solution to this, right, it would never happen. But at the same time, I think, we're getting to a point, maybe it's similar to where the railway industry was in the 19th century, mass innovation in trains running on different gauge tracks. And ultimately what it requires is for those different initiatives to come together to enable and facilitate interoperability across the industry. Because what we see happening up until now, and I think, Peter's right, we're seeing this convergence between the world of crypto, traditional financial services industry. One is learning from another, and those two worlds are steadily coming together, right? Fantastic example of this is stablecoins. You've heard both Mike and Tyrone talking about this subject. And the reality is while the regulated financial services industry was theorizing how electronic cash might work, right, the world of cryptocurrency was actually delivering it. Right? I can only imagine the the thousands of PowerPoints that passed across meeting rooms of Wall Street, trying to make the case of how electronic cash would work and trying to seek budget for multi-year projects. Meanwhile, we had the emergence of stable coins, right? Now, the industry will say, yeah, stable coins, as Mike says, all right, they're not going to scale for large transactions. They need to be better regulated. There might be issues with counterparty defaults, all of this sort of stuff. But at the same time, they're handling on-chain cash transactions, albeit at a smaller level. And that's released the genie from the bottle, right? So then you have, okay, Tyrone at JP Morgan, you know, with a commercial bank backed stable coin starting to deal with larger value transactions, you know, as we say, what's the default risk of JP Morgan, right? So it drives that innovation. And then ultimately you have central banks with central bank digital currencies, and maybe certain central banks worrying about whether countries like China might actually use the technology to establish a new global reserve currency, right? And you can't get a bigger question than that. And all of that innovation has happened in, say, 2 years to 2 or 3 years. So this is moving very fast. We've got all these different innovations, these different initiatives, but interoperability is absolutely key. So that's where the emergence of rails such as FinP2P come in, right? Where you can invest in, say, a regulated security, you know, maybe on a venue provided by Mike at London Stock Exchange, and you may want to pay for that security, maybe using a stable coin, or maybe an institutional investor wants to pay for that security using a commercial bank-backed stablecoin from JP Morgan on a completely different blockchain, on a completely different venue somewhere else in the world. And I think that's the key to unlocking that, having infrastructures such as FinP2P that can connect assets wherever they may be issued in the world with investors wherever they may be. And once we do that, then we open up and deliver the scale and liquidity that the industries needs.
I think one of the tensions that is, you know, I think that all of us obviously see is really in particular with the convergence and the interoperability is how you sort of reconcile the tension between the concept of this new market infrastructure, which is the tenant is effectively disintermediation, with CeFi, which is centralized finance, and intermediated regulated activity. Are we coming to a happy middle, you know, after the regulators sort of duke it out? Like where are we going with this disintermediated convergence with an intermediated regulated infrastructure? Marike, what are your thoughts?
Yeah, I think it's a really interesting question, and what Peter and Anthony are saying, I think it really resonates with us as well. For me, I think the way the crypto industry works is quite different. And so cutting out some of the intermediaries, for example, is not necessarily a bad thing. So for example, when I was still working in traditional finance, one of the concerns we had was actually the default of one of the central clearinghouses, as they actually grew quite significantly over the past few years. In the crypto space, obviously, we're built on the fact that you don't really need to know who your counterparty is and whether or not you can trust them. But it's built on the principle that we actually trust the tech rather than the people. So each trade is done on the basis of a predefined set of rules. And for example, the way the margining is handled is actually really interesting and something that I believe would add value to traditional finance space as well. So for example, there's no initial margin and variation margin like we have in traditional finance, but instead all the margin is paid up front. And on every tick, your account's margin balance is updated for the profit or loss that you make. But before you run out of money, there's actually a trigger point at which your positions get automatically unwound, or as we say, liquidated. At that point, there's still sufficient balance in the account to be able to unwind those positions. So in that case, it doesn't actually really matter who your counterparty is and whether or not they pay their margin requirement after the trade is done, and therefore whether or not you're trading for a CCP, for example. But that obviously doesn't really mean that we don't need any kind of regulation at all. Because when you trade directly on a centralized crypto exchange and you leave some of your assets there, you still want to be sure that you can actually trust that exchange and the custody partner that they're using. When you do some research, I'm sure you'll find that there are some exchanges that are more trustworthy than others. But I'm sure we can all agree that there's still some work to be done here. And this really gets us back to what I was saying earlier, that for us at Equinix, it is so important that we, but not just us, everybody, all participants in this market really work with the regulator to provide that investor protection. And we would really love to see that become more widely adopted within the space.
Thanks, Marieke. I think we're at time perfectly. You know, it's a fascinating space and it's quickly moving. I want to thank all of the panelists for their contributions and for the frank discussion. It was really interesting. Thanks very much.
Thank you.
Thank you. Thanks, everyone.
Thank you.
Bye.
Thanks so much for joining, everyone. Our next panel will start at 8:10 in about 5 minutes. Hi, everyone. Thanks for tuning in to GBBC's Blockchain Central UNGA. We will now start the panel on the future of finance, DeFi, and crypto, produced in partnership with Global Digital Finance. Without further ado, I'll hand things over to our moderator, John Salmon. Thank you.
Thank you very much. And thanks everyone for tuning in for this panel. So I've got a great panel here, and it's a great pleasure to be with you. Briefly to introduce myself, I'm John Salmon. I'm a partner and I lead our global crypto practice at Hogan Lovells. GBBC's Blockchain Central UNGA. We will now start the panel on the future of finance, DeFi, and okay. I'm assuming that no one heard the last 2 minutes, so hi and welcome to the panel on DeFi. Thank you very much for attending. I'm John Salmon. I'm going to be the moderator today. Just to introduce myself, I'm a partner at Hogan Lovells and I lead our global blockchain and crypto practice. It's a great pleasure to have a fantastic panel here today. I'm going to let the panel introduce themselves as we go. I'm getting messages wondering for attending.
Is it just me, or is there a recording over?
You need to turn off the YouTube stream if you have it open.
Okay, apologies. We seem to have some technical difficulties, but I'll hand over to Harriet. Harriet, could you introduce yourself, please, and maybe I'll also answer the first question, which is, what do you see as the future of DeFi and who the main players are likely to be? If you don't mind, Harriet. Thank you.
Yeah, absolutely. So good day, everyone. Harriet Browning. I'm business development lead for Europe at Consensus. I'm based in London. Prior to joining Consensus, I spent the best part of 12 years working in capital markets at different banks. Just a quick highlight on Consensus. Today's conversation is super interesting to us because we typically sit at the intersection of finance and technology, providing the technology stack and tooling, not just supporting DeFi and developers who want to build on public Ethereum, but also we work a lot with enterprise and helping them to revamp their technology stack. So it's absolutely a delight for me to be here. I'm invited to join this panel along with so many experts in this field. So to answer the first question, what will be the future of DeFi? I guess to look at that, we have to kind of consider the current landscape and where most of the activity today has come in crypto is from crypto native users. And we're starting to see also a number of hedge funds and family offices move into this space where they can run their own money. And there's obviously lower barriers to entry for those kind of institutions and organizations. What we're starting to see, I think, is more and more the more regulated institutions looking to move into this space. But of course, there's typically higher barriers to entry for those players. And there's a lot of difficulty in navigating the space. But suddenly we're seeing those traditional banks, financial services companies looking to figure out ways to be a part of this DeFi landscape. And so whilst we're not there yet, I think really for those guys, it's a journey. And so it's a step-by-step process that we're looking to take them through. And it might not be that they can jump straight into DeFi today, but really, you know, they can start by looking at things like business application automation, then looking at things like tokenized digital assets, and then maybe looking at, you know, potentially things like issuing stable coins and looking at DVP settlement of those assets versus the stable coins, and then ultimately eventually get to that point of full programmability. And, you know, then they will have the opportunity, I think, to really pilot and experiment with this whole DeFi ecosystem that's kind of burgeoning and growing alongside the traditional finance rails. So I'm super excited to see how those two spaces eventually will kind of come to a point of convergence.
Great, thank you very much, Harriet. Amber?
Yes. Hi, thanks, John. Hi, everyone. My name is Amber. I'm the CEO of Kaiko. We are a digital assets data provider focused on financial data, market data, working for institutions mostly. And my background is traditional finance. I used to be an equity derivative structure, and I'm very much interested, especially when we think about DeFi, CeFi, and kind of what is the future of this whole thing, in the use of blockchain as the underlying infrastructure for actual financial institutions to rethink the way they work. And what I love about DeFi is that it serves as a kind of incredible proof of concept in some way, showing that you can build decentralized exchanges, that you can program money, and that all of that actually works. Where I see the future of DeFi going is not necessarily just in the actual growth of DeFi, but it's also in CeFi looking at blockchain as an alternative to the legacy IT systems on which it's been operating for the past couple of decades. So that's an angle I'm very much interested in. And as that happens, meaning as CeFi slowly moves towards a more decentralized infrastructure, we are looking to basically partner with those institutions to provide everything that has to do with market data infrastructure. How do you bridge traditional finance and on-chain finance from a reliable data input standpoint? And that is key, as many other businesses, obviously custodians and prime brokerage, and there's a lot of different key services that are going to be needed in that future world, and data is one of them.
Great, thank you. Mary Beth.
Thank you very much for having me today. I am the president for the Americas for Merkle Science, which is a blockchain analytics company. Prior to joining Merkle Science, I was the chief legal officer for Bitstamp, also the general counsel for Kraken, and spent my first 20 years in practice with the U.S. Justice Department. So I sort of come at these issues from, having been a regulator, prosecuted financial crimes, represented major traditional financial institutions, as well as various digital asset developers and coin developers. And so I've seen the space really from many different sides. And with DeFi, it is obviously the newest and most exciting product out there today. And I think that it has a huge potential for driving financial inclusion, providing better, faster, more economical and transparent financial systems. But the challenges to it, I think, are consumer adoption and also solving many of the regulatory concerns. So I think that we've shown from a technical perspective that decentralized finance is possible, and that protocols are available to program, tokens across blockchains to move assets, quickly, cheaply, more transparently, and to make them available really to people all over the world. But so far, I don't think that that's happened yet. And I think that we have to look at who is currently using DeFi right now. And right now, I think it's the technologists and it's maybe the larger financial players. And so the purpose for which I think DeFi has the most fantastic applications are your everyday consumer who might not have access to financial systems. And so that one piece of it, which is how to educate people about how to use DeFi, how to make this something that is adopted by consumers around the world. And then second, how to solve the regulatory problems. And those are kind of two big issues. And whoever can figure that out is going to be the leader in the DeFi space.
Well, we'll try and figure that out in the next half an hour, maybe, Beth, right? Between us. So thank you very much, Raymond.
Thank you. Good morning. Hi, everyone. My name is Raymond Zenkich. I'm president of Evertas. We focus on insurance for crypto assets. I'm really excited to be on the panel today. And I also want to thank GBBC for coordinating the event and also its leadership in the space. I'm going to echo what I think many people have already said. I think for me, in answering the question about DeFi's future, I would say.
Sorry, Raymond, to interrupt, but your sound is not quite there. I don't know if everybody else is finding that as well, but I don't know if there's something you can do. But everybody else is coming through loud and clear, but not yours.
Oh,
it's a little bit muffled.
I tested it earlier. I can perhaps move. Is that better?
A little bit. Is everybody else finding that a bit lower?
I'll just speak louder then. Sorry, I'll speak louder.
That's better. Thank you.
Yeah, I'll start over. Hi, everyone. I'm going to echo what many of you have already said. My name is Raymond Zenkich. I'm president of Evertas. We focus on insurance for crypto assets. Excited to be on the panel today and thank GBBC for coordinating the event and its continued leadership. I think for me, in answering the question about DeFi's future, I would say look at the problems that exist today within the world of finance, and what are the problems where DeFi is uniquely positioned to solve. And Mary Beth also spoke about some of these. I would say there's a real tension between, for example, on one hand, financial KYC AML frameworks that exist today that are very pervasive, and on the other side, financial inclusion and accessibility. To me, DeFi is uniquely positioned to solve the problem of inclusion, accessibility to a financial system. If successful, I think the future is going to drive, in my opinion, unparalleled operability. And thinking about something more than just operability across blockchains, I'm thinking about interoperability across finance systems value chains, many that won't even be imagined yet. And I think it's going to be a big part of DeFi's future. And I'll just end by saying, I heard a funny quote a long time ago that in trying to predict the future, I'm either going to be lucky or wrong. So I think I'll just stop there.
Thank you very much. Daniel?
Hi, it's great to be here. I'm one of the co-founders of Orbs. At Orbs, we are developing a permissionless public blockchain for enterprise and large companies. And I'm also one of the co-founders of Hexa, which is one of the largest investment arms in Israel, investing across the crypto industry and very active participants in DeFi and yield farming. And I agree to what has been said so far. I think to look at where DeFi is going and where would be the future, it's a lot to see what are the existing pain points. And I think the two big pain points that are driving big innovation in DeFi is one, that money is becoming a burden. If we look at the quantitative easing that is being done by governments and even at accelerated pace since COVID, I think in the last year and a half, about 70% of all the money in the world has printed. Holding money is as a saving, it's not the best thing. So people are looking for alternatives to generate yield. And obviously we have trillions of dollars with negative interest rates, which is unprecedented. We're really living in economic times that are very, very unique. And the second thing, pain point is really accessibility to information in the financial space and also participation in financial products, which obviously because the permissionless nature of blockchain technology, DeFi can bring a competitive edge in that aspect.
Great, thank you very much, and thank you very much for that, for those introductions. That's really helpful, and I think I think everyone's agreeing that we've kind of got two major questions. One is adoption of DeFi, and the other is sort of risks and regulation around DeFi, which are happily the two next questions that I've got on my sheet. So that's extremely helpful that you've obviously read those and thought about those very thoroughly. So just going into that thing, and Mary Beth made, and I think others have made this point about, it does unlock the unbanked and allow that kind of democratization of finance and accessibility, as Daniel has just said. I read an article the other day where someone was suggesting that actually DeFi right now was quite elitist because it's quite clunky and hard, and you have to actually be quite technologically savvy to use it, at least right now. And in fact, there was a quote that I saw from Uniswap Labs the other day, admitting that the onboarding experience is still overwhelming, was the word used for the average user. So clearly the tech exists now. So just taking out the risk and the regulation for a moment, how do we think that we can, move to that broader adoption and making it easier, making it kind of easier for people to use? Ambre, do you want to start with that?
Yeah, I mean, one of the things about blockchain is the fact that people are technically in control. I mean, I think that this painful onboarding that we just described is also very much tied to the decentralized aspect of blockchain, right? I'm in control of my own coins or tokens or security tokens or whatever we'll have in the future. And so we can very, easily think about services that will make the whole interaction with blockchain easier and will make DeFi more available to the masses, but we're reintroducing this element of centralization. And I believe that it's indeed today it's still quite hard. I mean, I remember a few months ago, I had to sell some tokens on a decentralized exchange, and I basically didn't have gas on that wallet to pay for the transaction cost. And so I had to then send ETH to my wallet in order to put the transaction. All of these are blockers in some way, or at least there are definitely steps in the way. But I think those steps are key. Either we go to a world where we want people to have more control over their wealth, or we don't. But if we do, we can't give them the benefit of outsourcing everything to someone else and still be in control. So there's this, there's clearly a choice to be made here on the ease of access versus the decentralized nature of the actual tokens. And I keep saying, like, I get very upset when I hear people tell me they bought crypto on Revolut. I'm like, you didn't buy crypto. You bought the exposure, a synthetic exposure to the price of Bitcoin or ETH or whatever crypto you thought that you bought on Revolut. But until you have your private key and until you go through the painful process of owning your coins and knowing how to securely store them and send them and do what you want, until you get to that point, you're actually not really interacting with blockchains or DeFi or anything of such. So I think it would be a shame if we made it too easy, because that part is so key in the learning process of what DeFi means and what it means to be in control. And Daniel, sorry, I see you want to comment on that.
Yeah, no, there is this notion, and I hear it a lot, that because we're able to hold our private key, we are able to become our own bank, and tomorrow we'll be able to do DeFi ourselves and so on. But if you ask me, in my opinion, most people don't want that. I would actually wouldn't want my parents to hold their private key for their savings or large amounts. There's a lot of complexity involved in financial product and in money as a general. So I actually do see the direction of making it more accessible and easy to mainstream where the industry should be going. For example, Coinbase offering DeFi yields to their users. I think that's a great product that will be very effective and will impact a lot of people. So in my opinion, the fact that we can hold our private keys doesn't mean that this should be the way forward. I think making it accessible to everybody in the simplest form will actually impact a large share of the population, because most of the population don't want to secure their own money and don't want to dive into the technical aspects. And DeFi is very technical.
Yeah, but that is in a very comfortable first world where we are not afraid of institutions holding coins for us. And I don't want to sound too paranoid or anything, but I believe there is something new in the paradigm of what blockchain means and what tokens and blockchain tokens mean. And I think we should enhance the user experience, make it easier, but I still think that there is a learning process. If we just replace the back end and make it completely transparent for users, I don't think anybody will actually get even interested in what that means. What is the paradigm shifts with blockchains and tokens and this decentralization of money? But yeah.
So this is where sorry, I'm jumping in, but I think if we are able to disrupt the backend, if blockchain technology is able to be the backend for the financial system, which is completely transparent and permissionless, and then we have service providers providing the front end to mainstream users, that is huge, because today the financial system isn't transparent and permissionless. So I actually think that this is the disruptive part, the back end. If we're able to do that, that's a huge win, which is not necessarily dependent on the front end services and user experience.
Interesting.
If I could just add maybe one quick comment. I mean, a lot of my thoughts in thinking about this question echoed again what everyone's been saying. I think specifically, to make it more accessible, it has to be more, I would say, specialist. I'm not sure elitist is the right word, but maybe more specialist in nature. And at least from my perspective, what I see, I ask the question, what is meant by use? And so at least one big issue I see and I hear is that, or critique even, is that a lot of the use cases, they're based on token speculation. And I would just maybe ask the panel, what do they really think use is? Daniel, I think you put forward, I think, a very clear vision. But I just wonder, in terms of the activity, a lot of the activity I see is based on speculation around tokens, which is not, I don't think, Daniel, what you're proposing.
No, of course not. So first of all, yes, right now there's a lot of speculation and early adopters, and I don't think that the 1,000% APY in certain protocols is sustainable and so on. So I definitely agree there, but also we need to remember that blockchain is just a database to store information and do computation on this information. So all this notion that we've been hearing from banks and enterprises that blockchain technology is amazing, Bitcoin not so interesting, Ethereum not so interesting, but blockchain, that's a whole innovation there. I don't get that at all, because what enables you to have a permissionless decentralized ledger, it's the incentive model, and the incentive models are the tokens. So actually a blockchain without a token, you can't have the incentive models, and you can't have it completely permissionless. So tokens are key. Obviously there's a lot of pumps and dumps and scams and things like that, but definitely tokens are a big part of making this system decentralized.
Harriet, I see you.
Harriet, do you want to?
Yeah, sure. I thought maybe if we could take a quick segue away from sort of traditional DeFi as we maybe have come to know it, but if we're talking about adoption, one thing that's certainly become interesting to us is that we're seeing a lot of adoption of blockchain infrastructure and technology through things like wallets, like our MetaMask wallet, through actually the use case of NFTs. And actually we're seeing now NFTs maybe being a sort of gateway for adoption for lots of sort of consumers, because I guess it's an easier entry point to getting onto that roadmap where people get comfortable with holding their assets, using wallets, etc. And I guess probably a consensus, we're somewhat fortunate with the MetaMask wallet. It's actually a great, it's a great metric to take data from in terms of, how many users and how much adoption we're seeing. So, whilst we're saying there's lots of hurdles to adoption for DeFi, what I would say is we're actually in probably one of the fastest growing tech adoption cycles that we've ever seen. And if we use MetaMask as a proxy for that, we've seen 1,800% growth in a year in users, now surpassing 10 million users a month. And so I think certainly other use cases are coming to the fore, which are allowing consumers to start thinking about digital assets in a different light. And I think once people get comfortable with certain use cases, you will see more and more use cases in the financial sphere as well. So I think the adoption is coming, but obviously I totally agree. There's a huge amount of thought leadership and education that needs to carry on taking place in this space to really help people feel comfortable in taking ownership of their assets.
Yeah. I don't think that, I don't think that we should think of this as a, DeFi or something else. I think that these are all options that are available. And the more creations that occur, the more people can try out these new technologies and maybe get more comfortable with them. I don't see this ever totally replacing the traditional finance. That is always going to be there. This is just another option for people. And someone mentioned, Daniel mentioned his parents not wanting them to be holding their own keys. My dad still carries a wallet with actual cash in it. And, he probably has like an emergency credit card and probably a bank card, but I don't ever see him adopting any of these new technologies. And others, who wants to carry cash? Just use a card, use your wallet. It's all in what people are comfortable with, and the evolution and education, I think, are going to make more and more products accessible to more people around the world. And it's just, it's just an evolution that we're at the beginning, and it'll be exciting to see how far it goes.
Yeah, and it's very difficult. I mean, I totally agree with all the comments, and it's very difficult to predict exactly those use cases that are really going to necessarily drive adoption. I mean, if I reflect back on what we've seen in the internet, when the internet first started, it was, again, very clunky, and it was really quite hard to use, but some of the use cases came through, obviously we had World Wide Web, but I think people started to adopt them based on particular use cases. And I suspect the same will happen here, and we'll see applications that we haven't even thought about, right? And apps and ways of doing things that we haven't necessarily thought about. And I think things will move. I saw a hilarious old interview with Bill Gates, basically saying, "Oh, this internet's a great thing. You can get baseball scores on the internet." And the guy that was interviewing going, "But I can get that on the radio. Why would I? This internet sounds terrible, And we're not. Maybe we're a bit past that, but I'm not sure we're terribly past it. Anyway, Mary Beth, maybe you could kick us off with this next question, since you helpfully volunteered this issue around risk and regulation. I think, I've advised many clients in the DeFi space over the last few years, and what I always say to them is, the regulators, while the regulation in X, Y, or Z country may not cover what you're doing today, I suspect that they will look to try and cover what you're doing in the next period. And you can see, the SEC looking at Coinbase as an example. You can see the FATF consultation coming through as another example. There are, I think, particularly where you have DeFi propositions that have some form of central control, or where there is some money being made either directly or indirectly. I personally think that the regulators will be very interested in those protocols, those DeFi protocols. I mean, what's your, having been a regulator, like my friend Greg Lisa, I'm sure you will have a very firm view on this. Where do you see this going?
Yeah, as I think many of us have said, this is the beginning. We do know that the government has regulatory concerns about how DeFi operates, and they're very concerned about risk management. And right now, with DeFi, it has not been solved who is going to do the KYC and who is going to do the AML. And the fact that it's decentralized doesn't answer that question, because it has to be done. And the government may not have figured it out yet, but at some point the government is going to kind of stop and say, wait a minute, someone has to do this. You have to figure out a way to do it. And there have been a number of suggestions, which include everything from having it built into the code so that it's actually performed in a decentralized way. It's been discussed to outsource it to the traditional financial institutions who already have built-in KYC AML processes. And the fact that the government hasn't stepped in and acted yet is certainly no indication that they won't. I mean, look how long it took the SEC to take action, in certain, high-profile cases that are occurring right now. Also look at the CFTC, who didn't originally take action against some of the early peer-to-peer exchange products and peer-to-peer lending products. But eventually the government does step in and ask, who is going to perform these functions, which the government will never, walk away from AML requirements. And so I think that there are companies like Merkle Science and others that are trying to figure out how the KYC can be done, and how the AML monitoring can be done even on a decentralized platform. And so I think that we are figuring this out, just as we did in other areas like the travel rule, which has been around for a long time, and everyone knew that it wasn't technically possible to comply. And fortunately, I think over the past couple of years, the government has allowed the industry to come up with technical solutions that will probably work. And hopefully in the DeFi space, we're going to see the same thing, that hopefully the regulators will allow the technologists to try to come up with a way to perform those necessary, KYC and AML functions.
Isn't that
Sorry, I was just going to ask, just quickly. So Mary Beth, you're a firm believer that the regulators and policymakers around the world will demand KYC and AML from DeFi. Is that what you're saying?
Yes, that is my strong belief. Yes.
Yeah.
But
sorry, Ambre.
but completely. So I agree with with everything you said, Mary Beth. But I just wonder if like this will open the route for just new ways of doing KYC AML by potentially just validating a KYC of an address without necessarily revealing all of the stuff. So this is like the likes of Chainalysis and these companies that are looking at the credit worthiness of any given account, all of the different interactions, maybe applying some kind of AI to understand the general behavioral aspects of addresses, depending or if they're a contract, if they're a private, if they're a wallet, if they're just trying to understand, can we, from more of an AI computer science based approach, say, yeah, this is kind of okay from a KYC AML standpoint without necessarily having the passport of the holder of that account, just because it creates different types of complexities that are not as suitable for a DeFi world.
No, and I think that's exactly what I said, and I mentioned that that Merkle Science and other companies, that do similar blockchain analytics, are exploring ways to be able to perform that function that would be most or more applicable to the DeFi space. But and I am hopeful that the government is going to allow the parties in the ecosystem to come up with a way to address both the KYC and AML concerns and do it in a way that is going to work for this type of technology.
Yeah, that's Raymond here. Oh, sorry.
Yeah.
Go ahead,
Daniel. Do you want to?
Yeah, I agree to what has been said. I just want to highlight the tension. The tension is that blockchain and DeFi is permissionless and accessible by nature. So the blockchain doesn't know if a person is interacting with it or an IoT device or even a refrigerator. But with the governments and regulation, not every people is regarded equal because there are bad actors, because there are terrorists, even some nations are being sanctioned and so on. So I definitely think that tension will continue to exist and there will be regulation on the accessibility of the space. I hope that the transparency of information will be open to everybody, which is not today in the financial space. So if we can get that full transparency in financial applications, that would be amazing. And regarding the accessibility, as been mentioned, I think there will be such solutions that preserve the privacy while whitelisting actors in an intelligent manner, because most actors are honest and good actors.
Yeah. Harriet, I think you were going to get your hand up as well.
You're muted.
Yeah. You're still muted.
Yeah, I just lost my train of thought, so pass on.
Okay, if I could just jump in.
Yeah, go on, Raymond.
No, I was just going to say, we're an insurance company, so we obviously think about risk every day. And one thing I would just add is that the risks that need to be managed, they do go beyond KYC and AML. We look at actually hundreds of them. And at least in our experience, insurance is a really important way to help manage risk. And it also has a very powerful role in helping people feel comfortable, right? Because if you see that some company is insured, well, you know that someone else has looked at this, someone else has checked it out. I'm speaking very broadly here, looking at the protocol, the code, etc. So, in our view, insurance is a missing piece of infrastructure, not only for crypto assets in general, but for DeFi. It's obviously a problem we're trying to solve. And we've seen cases where institutions want to enter the space and they simply can't because it isn't there. And on regulation, maybe one question might be more for you, John. I was a developer in my past, and I often wonder, will regulation around DeFi have maybe some chilling effects on open source code development in general? Yeah. I know that's maybe perhaps a bit off topic, but it's going to be a tough road, I think, for SEC, for example, to navigate, because it will quickly touch on other industries. Yeah, maybe for different panel.
Yeah, and I agree with you, and I think we've got, I think it's really tough for regulators to approach truly decentralized protocols and DeFi, right? Because what do? Do you ban it? Unless, to Mary Beth's point, you can build it into code, but do you ban it unless it is done in the code? Do you basically put the responsibility on the developers? there's actually very few options you have, because you basically say, well, you cannot launch a decentralized protocol unless the code allows AML to be carried out correctly. And does that then put the obligation on the software developers? That would be quite an odd thing, from traditional regulation, but that might be where we end up. Harriet, have you remembered your train of thought, or do you have a response to that point that we were just talking about?
So yeah, I think we are seeing that a little bit in the DeFi space now, right? So we're seeing protocols coming in with their institutional version of their protocol. You look at the Aves and the makers, and the fact that where it's got to is almost creating segregated white labeled kind of product, which is only for institutions to interact with, provided that they've gone through a KYC process, which I guess in some ways is, a kind of workaround to try and figure this out in the meantime, whilst we wait for regulators to give more clarity. And I think, certainly we talk to a lot of custodians, a lot of funds, around this space, and it's always the top of their agenda is, regulation and compliance. And I think when we get clarity, the better tooling that we can develop for those institutions around that framework of clarity that we get from regulators. And on our side, we've launched an institutional version of MetaMask, for example, and we've worked a lot with those funds and custodians to try and build in those sort of features to enable them to have those kind of robust reporting, monitoring, compliance, and execution. But of course, there's still a sort of gap, I think, and that's what we're really kind of trying to fix for and solve for. And yeah, hopefully we get a bit more clarity, I think, to help us build better tooling and make those regulators comfortable as well.
Yeah, thank you. No, that all makes sense. We've only got now 3 minutes, according to my clock. And I just was quite keen just to pick up actually on Harriet's point, and a point that I was keen that we covered in this panel, which is how do we see this DeFi space interacting with the traditional financial system and working with banks? Do we see banks effectively adopting DeFi and having an app? Or what do we see? I mean, Harriet, do you want to kick us off, given that you just kind of started on that, and maybe we could cover that quickly with the other panelists, bearing in mind we've got 3 minutes, guys.
Yeah, so I think, it was probably my opening point, but it's really about a convergence of the two spaces. And, banks definitely want to be involved, but just knowing how they can be involved. And so I think probably, the back end will be very much a sort of DeFi-driven program, but there'll probably be all these front-end applications for banks to use to enable them to be comfortable with using the space.
Ambre?
So I'm going to agree with what Danielle said earlier about the back end. For that, fully agree. I think institutions are going to start looking at what you can actually transform of the legacy IT moving towards a more blockchain-based system. That will take time, and I think it will kind of go with the wave of issuance of security tokens. And once you start having security tokens, the next tempting thing to do is to issue financial contracts. And there are a lot of things. The easiest that come to mind would be simple call options or derivatives, which is just a mathematical formula on top of underlying assets. So all of these things, I think, will show that once you have materialized a tokenized security on a blockchain, then it opens up a lot of opportunities for what you can actually do in terms of managing the secondary life of that asset. And that is just a cheaper, better, more efficient way to do what most of traditional finance does today. So I'm a big believer in the fact that institutions, it's not about getting into DeFi, it's more about using blockchain as a back-end infrastructure for a bunch of parts of the legacy IT.
Daniel?
In my view, still most of the large enterprises and institutions, I'm not sure how beneficial they are, because this space is moving so quickly and it is so disruptive that I think they are one of the reasons that potentially will slow it down, because they have their existing revenue models and an ecosystem to guard. So I think there's a lot of lobbying being done by some of these actors to actually, slow down some of this disruption. So in my opinion, don't join, just don't, hold back innovation through lobbyings and stuff like that.
Okay, thank you. Mary Beth?
Yeah, I fully expect to see the traditional financial institutions trying to get involved in DeFi somehow. Remember what they were saying, in the early years, oh, this cryptocurrency is a bad thing, it's rat poison, it's whatever. And then they saw that it is adopted and it is growing in the space. And now they want to figure out how can they get in the cryptocurrency game. And they're going to quickly see that DeFi is growing in adoption and it's being done much more economically, and it will take away their business. And they're going to want to figure out, how can I get in on this too, so that I can use this technology and provide a different offering to our customers.
Raymond, last but not least.
Thank you. I mean, real quickly, I'll just add that I think where you have, places with less robust economies or governance, I think you're going to see just some type of mobile-based app acting as an on and off ramp for DeFi services and products. And then in other places where you want to have DeFi connect to CeFi, we're still a way off from that. I'm not sure how far down the road, but that to me is going to be the exciting part.
Great. Thank you very much. Sophia, I guess we're at time, right?
Yes, thank you all so much for joining us. You have a few more minutes if you'd like to close out.
We do? Okay, thank you. Were there any questions, Sophia, from the audience? Any final thoughts from anyone on where we see things going?
Just maybe from my end, I think that if you look at fintech and where success has emerged, I think the top driver, in my opinion, has been user experience. If you think how hard it was to buy a stock 20 years ago, or even 10 years ago, and how easy it is today on some of the apps that are there in the market. Or if you think about Bitcoin, buying your initial Bitcoin on Mt. Gox 10 years ago, and how easy it is today, it's really drive adoption. And I think this is what DeFi is about, how you can make financial services more accessible. And once the backend is permissionless and accessible, then startups can start developing front-end solution at a much faster pace. My previous startup in the fintech space, it was very hard for me to deal with regulation and different measures of security and compliance. But I think DeFi and blockchain will make it easier to the next chains of startups that are involving in this space. And it's all about user experience and giving the best result to the end user.
Yeah, and I totally agree with that. And that is definitely the experience of fintech, isn't it? And actually that's been driven mainly by payments, the fintech ecosystem. And I do think, we'll start to see the use cases coming through very strongly. Ambre, anything else to add on?
No, I generally agree. I just think there's a bit of education that needs to be done. It's just going back to what we said earlier about the use, the ease of access and usability of DeFi. I just think we have an opportunity to share a lot of what that means, this new paradigm, and that may be less relevant for kind of developed countries, but there are some countries in the world where knowing that there is an alternative to their existing monetary and economic system is something that is important. And it would be a shame if kind of, people were completely agnostic to what was behind their financial system. I think education and sharing what it means to have a decentralized financial infrastructure is important. And maybe I'm being too dreamer about that, but I really hope just the people realize what's going on here.
Yeah, interesting. Beth, any final thoughts?
No, I think we've all pretty much summed it up, that we're seeing and going to continue to see changes and figure out how we are able to make this work in terms of educating consumers and satisfying regulatory requirements. And as long as the regulators allow the parties in the system to come together and try to propose solutions to the government, I think it would be a much more effective and efficient and better end result if regulators give that ability for the parties in the ecosystem to try to figure it out.
Yeah. So an industry-led solution is what you're proposing, Mary Beth, rather than one that's dreamt up by policymakers and regulators who don't understand the system.
Well, I wouldn't say don't understand the system, because I do think that regulators have been doing a really good job at trying to become more educated about the cryptocurrency space in general. They've come a long way. And if they do the same thing that they've done with the travel rule to allow the parties to come together, share information, and try to propose solutions for how the the regulatory requirements can be met, and how the AML and KYC can be built into the system without having the government impose something that might not be technically possible.
So are you suggesting a kind of principle-led thing rather than a very highly prescriptive regulation that the industry can then respond to in an appropriate manner?
Exactly.
Yeah. Yeah. I mean, totally makes sense to me. It's not necessarily the way that some common law jurisdictions do it, right? But we'll see. Harriet?
No, I really don't think I could articulate it any better than to echo the closing remarks of everyone else on this call. I think they were brilliant points made, and I think it's great to hear so many people thinking very similarly, I think, about this space, and hopefully we can make the difference and change for the future.
Excellent, thank you. Raymond?
I would echo what Harriet just said. I think excellent comments from everyone. I think it is an exciting time to be at this intersection of technology and finance. I think the next year is going to bring a lot to the DeFi space, so it's going to be exciting.
Yeah, thank you very much. Well, thank you very much, everyone. I really appreciate your time and your excellent contributions. I found that personally really interesting. Lots of food for thought, and no doubt we will speak again soon. Thank you very much.
Thank you very much. Thanks.
Bye, everyone.
Thank you.
Bye.
Bye.
Thank you.
Hello, everyone. Welcome to the Global Blockchain Business Council's Blockchain Central UNGA. First of all, I'd like to say thank you very much to Global Digital Finance, our partner today, in the programming that has already occurred. We've had a couple amazing sessions on talking about DeFi and market infrastructure, and we had a welcoming keynote from a number of United Nations and GDF co-chair Lawrence Wintermeyer keynote, so I appreciate that. I'm going to take a few minutes and talk about a few things that I've learned in the last 18 months or so while we've all had to sort of stay still and readjust our lives. We've seen a real world where we've seen lots of crises and terrible things occur, but we've also seen in the blockchain space the acceleration of the digital economy. And frankly, acceleration that very few people anticipated even a year ago has happened in 2021. What do we do with that? What do we do in a world where there's one reality where the digital economy is booming, and then the other reality where there are countries, there are communities, there are entire peoples that are suffering? How do we marry the two so that we actually create a better society? I have a couple things I want to share. When people ask me why you spend your time and dedicate all of pretty much your entire life and time to blockchain technology, I have one thing to say. It's not about the fact that I think it is a multi-trillion-dollar industry in the making. I do believe that. It's not because I think they're going to be a whole crop of new billionaires and millionaires being created. I believe that too, but that's not the reason. The reason why I get excited about blockchain technology is because it is truly a collaborative technology. It requires and wants us to work together. Even in times when we are physically separated, it asks us to work together, people and groups and organizations that may not normally talk to each other, whether it's public sector government agencies, whether it's NGOs, whether it's academia or law firms or private sector, big enterprise versus startups, whether it's protocols. There's something really special here that pretty much everywhere in the world, somebody is working on solving a problem and using blockchain technology, tokenization, digital assets, cryptocurrencies to solve for some of these key problems. It is not a panacea for the world in every aspect, but technology has the ability to be a unifier. So when I think of it as a unifying technology or a medium, I put it akin to how many people, when you look at sports, when you look at music and arts, you see that it brings people together. I hope and encourage all of you who are in this space, who are thinking about joining the space, to get involved with this in mind, which is, how do we solve for real world problems? How do we bridge gaps? How do we actually use this technology to be a unifier in a world where you could easily point out all the wrong, all the differences, all the horrible things? Why don't we try to focus on the commonalities we have as humanity, as a global village, and help each other? And I hope you will be successful. I hope you will, but lift other people up while you're doing that. And I think if we all were to do a little bit in our own corners, we could actually affect change like we've never seen before, and for the better. So with that, I welcome you. I hope you are able to glean and learn a lot from the 100+ speakers we have over today and tomorrow. And I really hope you think about how you will contribute to this great movement of humanity, of collaboration, and where technology can help assist us creating a more equitable and fair society. So with that, I thank you, and I encourage you to ask as many questions as you need and join us on this journey.
Hi, everyone. Thanks so much for staying with us during the GBBC's Blockchain Central UNGA. We will now hear from Bernhard Kowatsch, head of the Innovation Accelerator for the United Nations World Food Program and a GBBC ambassador to Germany. Thanks so much, Bernhard. We'll hand things over to you.
Thank you so much, Sophia. It's a great pleasure to be here and share some thoughts about how the World Food Program uses technology to reach a world of zero hunger. And this is really from the perspective that we are coming from. We're talking about typically the world of zero hunger. Now, why do we need this? Is like, unfortunately, the trend has actually gone into the wrong direction in the last couple of years. There actually has been an increase of hungry people, both because of like conflict, climate change, but also most recently, unfortunately, COVID-19, which means there's now 811 million hungry people on this planet, which means we need to do more. We need to use technology and innovation to really tilt the curve towards zero hunger if we're serious about what we do. Now, you may know the World Food Program. The World Food Program is saving lives in emergencies, but also changing lives in more sustainable ways, like with school meals programs, mother and child nutrition programs, connecting farmers to markets. And we're still Nobel Peace Prize laureate for a couple of other weeks, so which is obviously something that our colleagues in the field are particularly the backbone of these operations, that we're really, really humbled about this prize still. Now, when you're thinking about the World Food Program, you may think this is like what you see here, like physical food that's being delivered. But in a global scale, there's actually digital assistance services and a digital operation throughout what the organization does. And this map here just shows you a little snapshot, like the purple markers, actually, they show you where there's digital assistance services for the people who we serve in different countries. So you see, actually, it's actually widespread. And it's one of the key priorities of the organization as well, is digital transformation. And you may not know this, but like the World Food Program has a digital strategy. There's data and analytics. We automate, and there's also an app ecosystem that's being driven by our digital transformation center that's actually located in Nairobi in Kenya. Now, speaking about things that you may not know, it's like we also have an innovation accelerator that I am having the honor of leading, with the purpose of identifying, supporting, and scaling innovations and startups that can help us disrupt hunger. And some of this, and this is why I'm really excited about being here at the GBBC Blockchain Central again at UNGA today. It's really about how might we use blockchain technology to do this. Now, our typical accelerator program is with a small innovation function, like a incubation function that we call frontier innovations, where we look into aspects like blockchain technology, artificial intelligence, robotics, like to incubate them. The rest of what you see here is what you would see in any other private sector startup accelerator, just that it's optimized for global social impact. And we're doing this, of course, right now, all of this virtual, but also we have established field innovation hubs in different countries, and we are providing these services to other partners in the humanitarian and development space right now also, and not just in the zero hunger space anymore. So different SDG innovation accelerator programs. But everything that you see here is on a path to scale. So you see on the top right, 14 innovations that are now actually scaling, which by the end of last year had reached a total of 3.7 million people. And those innovations have also provided, actually raised a total of $118 million of grant funding, which goes to show that if you find something where technology and innovation can create impact for people, you're actually able to find partners, like could be government partners, could be foundations, could be corporates, or high net worth individuals that then support this. Now, but I'm not dwelling on this for too long. Let me show you a couple of examples where we use blockchain technology as an organization, also with other partners, to make the services for people, hungry, poor, vulnerable populations, even better than what we were before. And the first up that I would like to mention is called building blocks. Building blocks, and some of you may know this, is a blockchain-based cash distribution system. It's a beneficiary-centered neutral blockchain system where we aim at harmonizing and optimizing the humanitarian assistance and maximizing the value for the people who we serve. So this is something that's actually already being used by 1 million people in 3 countries. So in Bangladesh, it's Rohingya refugees, in Jordan, it's Syrian refugees, and in Lebanon, it was used to coordinate the multi-wallet, so multi-purpose aid that was being given after the Beirut blast that some of you may still remember. And if you're thinking, well, you know, blockchain, that sounds like something that is only, you know, embryonic, maybe a little pilot. Building Blocks is active since 2017, and it has already processed over $271 million of cash transfers to people, saving 98% of the banking fees, and being more efficient and a better service to people also accessing it. Another example is called The Atrium, which is a collaboration between our friends over at UNICEF, ourselves, and most recently UNDP, where it's a multi-UN agency learning and collaboration platform just for UN entities. But there's over 500 members from across the UN that are already on this and are experimenting with blockchain technologies to make blockchain technology widespread, mainstream, and actually ready for also the best use cases that you could think of benefiting some of the world's population who are most in need. Now, going on, another example I want to mention is actually a digital microwork innovation we're working on. It's an innovation from the World Food Programme called MPACT, together with C Labs, Appen, and also Corsali. So what it does is actually connecting some of the youth, people who are unemployed, maybe they have previously been employed in services sectors or in low income sectors, like connecting them with microwork online. We know there is a big market for microwork even right now. And what's the beauty of this? You are no longer location dependent. You can actually get an access to the global digital economy, irrespective of where you are. And our program Impact is already reaching 55,000 people in Iraq, Lebanon, Kenya, and Turkey through microwork. And obviously, this is where we are really excited about things where we can help people provide for themselves where they are. And even if they have been displaced, they can earn money online. Sometimes it might be $5, $6, sometimes even above $10 per hour, people who were previously dependent on international aid. And I think this is something that's really exciting. Now, as last example, I want to mention an innovation called Decapolis, which we've supported in Jordan. And this is about the traceability on blockchain technology for food quality from farmers and regulatory agencies. Pilot is ongoing right now in Jordan. It's really exciting, because this is the power of why would you actually use blockchain? Well, it's immutable. There's records that can be created that also capture and foster collaboration between different people and different stakeholders. One of the best examples you could think of. And then maybe let me close with this. What are new areas that we're looking into? On the one hand, we are looking at efficient delivery mechanisms and financial inclusion. So this is all about how might we best serve people. Maybe it's possible to actually create like wallets or cash transfers to people, but there is no chance to actually include them in the financial ecosystem. So how might blockchain enable that? The second aspect is about beneficiary assistant models and how we can make them better and also like include people more in that. Then smallholder farmers, in our case, like a lot of times when people talk about smallholder farmers, you're just focusing on the quality or food quality aspects. For us, it's also important that smallholder farmers get the fair share of the market price and that we're able to lift them out of hunger. And most recently, also with a collaboration with our friends from UNICEF, we're actually looking into crypto assets. Would it be for either cash distributions? Could it be for donations? Other aspects that we're actually looking into. Now with this was just a snapshot. I welcome everybody again at the Blockchain Central at UNGA from GBBC. Thank you very much for your attention, and it's time to disrupt hunger. Thank you very much.
Hi, my name is Yifan He. I'm the CEO and the founder of Red Day Technology. Also, I'm the executive director of BSN. As a member of GBBC, I'm honored to be here today. And first, I want to talk about the sustainable development from our perspective. BSN is the infrastructure. So I want to emphasize how important infrastructure is to sustainable development. First, we can see in past 30 years how internet grows. Right now, all our life, all our technology, all our commercial activities, even agriculture, industrial, everything related on the internet so that's how infrastructure, I think, is one of the most expect in the sustainable development. Because we are working on the BSN. BSN is basically a technology involved blockchains. So what blockchain really is, from our perspective, it will become one more communication layer on top of the internet. The internet basically handles transmission, communication between two IT systems, but the blockchain technology enable, multiple IT systems, even up to unlimited IT system to communicate in a broadcasting way of data transmission. So that's what we believe. Eventually, internet will grow up and add a new communication layer on top of that. So that's basically the vision for BSN. We're starting by integrating all the clouds, integrating all the blockchain technologies, try to build a very infant level of communication layer on the internet. So that's why eventually this layer will enable all the IT systems in the world, no matter how small they are and how big they are, can achieve much, much more efficient or cost-saving communications among them. So that's why we really, glad to be here to get involved in the conference and also the projects. One of the projects we are working on right now is we will be a sponsor of the Fish Hackathon. Fish Hackathon is one of the largest environmental hackathon in the world. It actually started by the U.S. State Department back in 2014. So we will be not only be a sponsor to the hackathon, we also will provide free access to BSN as a platform for developers to freely to develop their blockchain-related applications in the hackathon. Because the Fish Hackathon is also one of the sustainable development goals in the UN. Basically, the life underwater. So it's definitely something we are willing to get involved and and to provide any support we can. But our belief still in even our work is still in the infrastructure. Okay, because without the infrastructure, everything will be done more costly, time consuming, a lot of time consumed. So that's why, infrastructure is our focus. And we believe one of the largest, if not the largest, internet will be benefit and upgraded to next level by blockchain technology. And that's our mission of BSN. Thank you very much. And I hope the conference to be very successful and very honored to be invited here. Thank you.
Hi, everyone. Thank you for staying with us on the GBBC's Blockchain Central UNGA, an official partner event of the UN Foundation's Global Goals Week. We'll now begin our panel on building trust and transparency into our supply chains. I'll hand things over to our moderator, Katrina, to get us started. Thank you.
Thank you very much. I would like to welcome everybody to this panel on the 12th sustainability goal of the United Nations, which is on responsible consumption and production. Would also like to thank GBBC for organizing this event on a topic which is very much at the forefront, obviously, of the agendas of policymakers around the globe. I'm very honored to moderate this panel discussion on the issues arising from global supply chains. And I'm very much looking forward to the insights which we will be receiving from the experts on this panel, all of which are working towards sustainable supply chains in their line of industry. And on that, I would like to give every panelist the opportunity to briefly introduce yourselves before we go into the discussion. But no, Doug, do you want to start?
Thank you very much, and thank you for inviting me to join you on this panel. So my name is Doug Johnson-Pernscombe. I'm Chief Exec and co-founder of Circular. We're a technology business, and we work on supply chain traceability, specifically enabling car manufacturers, for example, to source some of the most polluting components like EV batteries more sustainably in their supply chain. So we're helping them ensure both responsible sourcing of critical raw materials, for example, cobalt in the battery supply chain, and also measure the embedded carbon in the supply chain in order to find ways to reduce it towards their net zero ambitions.
Thank you. Jeff, do you want to go next?
Hi there, I'm Jeff Townsend. I'm from the Critical Minerals Association. The CMA is a UK, now predominantly becoming international body that brings together critical mineral companies in an aim to have a more clear, sustainable, ESG compliant supply chain alternative to that exists already. Thank you.
Thank you very much. Gemma?
Hi, my name's Gemma Green. I'm a co-founder and the chairman of Power Ledger, and we make software for distributed and decentralized energy markets using an underlying technology called the blockchain. We've been operating for 5 years. We've got about 20 clients in 9 countries.
Great. Phil, want to briefly introduce yourself? You're on mute, Phil, for the moment.
Hi, I'm Phil Abraham. I'm with Dragon Chain, and we have a quantum encrypted blockchain and quantum encrypted smart contracts on blockchain. And we're focusing on building out very secure supply chains, very fully transparent ESG platforms, and bringing full transparency into the entire supply chain system, with our specialty on connecting disparate systems so that we can bring rich and robust information to the customer. And all of this is secured on the chain. Thank you.
Perfect. And then last but definitely not least, Emmanuel Ngubo, who only an hour ago found out that he actually was going to be on this panel. So thank you very much again for your flexibility, Emmanuel. And the floor is yours to introduce yourself.
Thank you very much. My name is Emmanuel Ngubo. I'm the Developer Relations Engineer at Aventus Network. I'm filling in today for our CEO, Alan Vey. Aventus Network is a layer 2 blockchain network currently working as a scaling solution for the Ethereum blockchain. However, Aventus does operate as a standalone blockchain with its own security protocols, consensus mechanisms, P2P network, and we're built on Substrate so we can attend to any business logic. I'm so excited to be here. Thank you very much, Katrina.
You're welcome. So maybe as a brief introduction, I think following COVID-19, the focus of most countries in the Western world is getting back into the global economy, getting back on track, and going back to what we had before COVID. However, I think we all agree that worldwide consumption has a destructive impact on our planet, and it is no secret that we are overusing the natural environment and resources in a manner which is endangering the very ecosystem we obviously rely on to survive. At the same time, the supply chains have become much more global over the last, I would say, 20 years, definitely, much more fragmented and thus much less transparent. The question I think we're all tackling is how can blockchain technology offer a solution to this problem, and what does it need for this to become a success? I'd like to start out with a question to Doug. If you look at the present traditional supply chains, where do you see the largest weaknesses? What should be addressed?
Good question. So we work primarily in the automotive supply chain around battery material traceability, and batteries obviously are essential to the energy transition, the move to electric vehicles, but of course the manufacture of batteries is incredibly energy intensive. In the battery supply chain, there have been responsible sourcing concerns for a while. You know, nobody, for example, would like cobalt that comes with concerns of child labor from, you know, artisanal mines in the Congo. And so there's a relatively high degree of transparency in that supply chain compared, for example, to supply chains for other commodities like, for example, palm oil. Now, notwithstanding that degree of transparency, what is lacking in such a globally distributed supply chain, where you have at one end of the scale potentially, you know, small scale and artisanal mining, and at the other end, you know, huge brands manufacturing vehicles in Europe or North America, is trust. The number of tiers between mine and car, number of tiers of supply chain can be up to 8. For recycled, it's 4 or 5. And so in such a distributed supply chain with such asymmetry between, you know, the end OEM and the upstream producer, creating trust in that environment, combination of self-reported data together with third-party data such as audit reports, and actually believing what's going on in those supply chains, is something that lends itself quite naturally to the idea of a distributed ledger. But like every technology platform, we all know about, you know, if you'll pardon my use of the vernacular, crap in, crap out on any form of technology platform. You still have to make sure that what's written to the distributed ledger actually has some validity. So of itself, a blockchain doesn't solve the problem, but what it does do is enable, certainly on our platform, enable a notarization of transactions, bearing in mind that the elapsed time could be 6 months from source to consumption, notarization of transactions so that history can't be rewritten if it subsequently proves to be inconvenient.
Thank you. Gemma, you're in a very specific area of resources, being energy. Would you agree with Doug, or are there some very specific elements in the energy supply chain which you would like to highlight at this point?
I think in the case of energy, it's possible for multinationals to make commitments to be 100% renewable energy autonomous and validly and legally claim that they are doing that by buying renewable energy certificates. And if their renewable energy certificate is representative of 1 megawatt hour of renewable power, but it is possible to buy a certificate that was generated at a different time and place to the actual load profile of the company. And so what that's in fact doing is encouraging the growth of renewables, not where it's needed and not when it's needed. And with only a few companies doing this, it doesn't really make a big difference. But as more and more do this, and now I think 25% of multinationals globally have pledged to be 100% renewable, this is starting to really impact grids in a very negative way. And Google and Microsoft have had insights about this and have pledged to become 24-hour renewable power. That is to say, matching their renewable energy buying and renewable energy certificate buying against their energy load profile. And they've pledged to do this by 2030. And I think that in order to do that, they need to be very granular and specific. And I think the term, I think notarization, I quite like that in terms of actually, you know, tracking and tracing the provenance of the energy against the load profile of these companies with sites all around the world, and having real clarity and transparency around that is very important to build trust, because a lot of the brands are making these claims and also building and enhancing their reputations off the back of them. And the issues that I mentioned a moment ago are now coming to the attention of the media, and there's quite a lot of coverage around you know, greenwashing, allegations of greenwashing. And I think that this is it's only the beginning of this, really. And so the corporate sustainability leaders really need a point of difference away from 100% renewable to 24-hour renewable power, and they're going to need solutions to be able to validate these new claims that they would like to make.
Thank you very much. We're speaking about at the end of the day, the consumer having to have trust in the sources and in the supply chain. Now, Jeff, you're a speaker for the Critical Mineral Association, and you aim to ensure secure and sustainable supply chains for critical minerals in the UK. Taking the consumer view, why do corporate consumers have to invest into understanding the supply chain?
That's a really important question, so thanks for asking it. So if we look at the way that you and I engage with brands, we look at the brand. We don't necessarily look at the supply chain that feeds into that brand. And therefore, the marketing impact of getting it wrong falls predominantly with the downstream OEM. And therefore, it is inherent on them to be better at understanding the supply chain that goes into them. Now, where does that fit in? We have a more enlightened, more knowledgeable consumer base than ever before, and we have mobile phones, tablets, laptops. All the knowledge in the world is there. In the mining world, this is all the power in the world. I can take a video or a photo and stick it on Twitter, and that can end a mining operation or close one down if I decide that something wrong is there. So we have that incredible desire now, and what we're seeing with that, albeit predominantly in high-income Western worlds, is what's been referred to over here as social capitalism, i.e. people putting a monetary value on their ethics or the morals. So it's really important, therefore, for, like Doug said, for car manufacturers or any of those companies looking at selling into the market to understand their entire supply chain. And this is where blockchain is so exciting, because you can track it from using provenance work as well. What you can do is you can track a mineral from almost a square meter in the ground. You track the ESG and the way that's produced throughout the supply chain, and you can track that ESG, which I think is really important. I think the second thing that's really important is, so the first one is that they meet the consumer demand. The second one is ESG finance. So it's becoming increasingly difficult to find finance unless you are ESG compliant. And therefore being able to demonstrate that throughout the supply chain is and will be increasingly so such an important thing. And finally, I would say government engagement. This is a sector where governments have, bar a few, have been relatively more willing to let market forces drive it, although it's a monopolized sector. And now governments are starting to get more and more engaged. What they're wanting to see is ESG compliance throughout the supply chain to back that up and to show that their engagement is worthwhile, necessary, and doing the right thing. So it's really important that you can understand the entirety of what goes into your one product that you're trying to sell on.
Phil, you have dealt with supply chains quite often in your life, and I think in your previous projects, you were focusing on creating a transparency of the supply chain. is it an anachronism for customers to, on the one hand, ask for transparency of the supply chain, and on the other hand, require constantly cheaper products? That goes obviously both for private consumers and for corporates.
Well, first off, what my research and work has shown is that you can have both. You can improve these supply chains, bring in that transparency, and reduce supply chain costs by what we're seeing 30% when you migrate to the blockchain. So you can reduce costs. The traditional thinking by supply chain executives is that if they move towards any new system or technology or blockchain, their costs are going to go up. Or if they try to embed complex cybersecurity, their costs will go up. We've actually been able to demonstrate that you can bring costs down, make things more secure, and improve the supply chain. Also, what we have found is that by utilizing what we call supply chain complexity science, which is the ability to predict with north of 90% accuracy, 6 to 12 months out ahead of an event. And so through supply chain complexity science, and by being able to predict 6 to 12 months before an event happens, and embracing the blockchain, if it has the right patents, like we do on interoperability and things of that sort, you can go after those disparate systems where the real information is. So currently, supply chains actually cannot get at the real information because it's hidden away at a disparate system somewhere. And that's why you have constant and ongoing chaos in supply chains. It is approaching 2022. And it's amazing that supply chains, like an example of General Motors, all their car plants are shut down because of mediocre supply chains. It's just uncalled for. It shouldn't even be happening right now. And that really stems from the inability to address complexity science, connecting disparate systems. And even though we have patents that are rich and robust on the ability to interoperate with disparate systems, supply chain executives have to embrace and understand the significance of why they need to learn how to quantify, identify, catalog disparate systems. So running supply chains effectively, the supply chain executive has to embrace not traditional supply chain practices, which don't work and have proven not to work. They need to embrace complexity science and disparate systems, which would then put them in the front of the pack with rich and robust knowledge. And that drives down cost.
Mm-hmm. Mm-hmm. Okay. I think we get back to that and the issues and what has to be done so that they embrace this technology at a later stage. We've been talking about renewable energy, about energy consumption. We've been talking about the need for trust in the blockchain. But blockchain itself has been criticized as not being very sustainable when looking at energy consumption. Emmanuel, how is the blockchain address on energy consumption and blockchain?
Okay, so energy consumption and blockchain. I think that it's really interesting when people talk about energy consumption with the blockchain technology. I still believe that blockchain technology is still very relatively new. It's still just at its inception stage. I mean, since we've seen it since the Bitcoin white paper, and it's grown, and we've seen different levels of blockchain. We've seen layer 1 blockchain technologies, we've seen layer 2 blockchain technologies, we've seen side chains, and we've seen the blockchain adapt. We've seen it grow since what it was at Bitcoin. And I think that the blockchain is growing. It's learning across its parts. It's coming across different use cases, and it's growing. So in terms of its energy use, I think what people mostly refer to is proof of work. And with proof of work, what we find that proof of work did an amazing job of showing us what the blockchain technology can do. It showed us that this technology can be cryptographically provable. It showed us that it can inspire trust. It showed us a number of things. And although it's not energy efficient in the way that it does all these things, it's shown us what the technology itself can do. So along the line, since 2008, we've seen the blockchain technology advance in different consensus mechanisms that have been proposed over time. We've seen proof of stake, we've seen delegated proof of stake, we've seen nominated proof of stake, we've seen proof of authority, we've seen Byzantine fault tolerance algorithms, and these are all different attempts of the community coming together and saying, we believe in blockchain technology. We know that it can be used across different industries. We know that there is a potential for it in supply chain, for example, and now we want to see, okay, how can we best make it energy efficient? And that's what we've been seeing since 2008. The number of consensus mechanisms that have come out are alarming, but yet they still show us that there is a community that is growing behind blockchain technology that said we want to use it, we want to make it available to various industries, and we are currently trying to come up with the best solutions to make it energy efficient as possible.
Perfect. So the blockchain technology is here. We see a number of apps, we see a number of use cases. What does it take that blockchain will be embraced by the industries? So you've got your CFOs, you've got your CEOs who are not blockchain enthusiasts like most of us, I guess. Where do we see the main barriers for adopting these protocols by the industries? Jeff, maybe you can talk about your discussions which you have with industries in the UK.
Yeah, of course. I think it's really interesting one. So let's take it from the easy to the harder. The first one is a lot of people will be concerned about integration. So some will want to have one blockchain system, others will want another one, and how does that fit along the supply chain? Scale. So as Doug mentioned, the critical mineral sector goes from massive, huge companies like Anglo, and Rio, and BHP, all the way down to artisanal miners. Now, scale, obviously, and the cost of blockchain and trying to convince small artisanal miners that they need to do it is almost impossible. So at some point, you have to accept there will be gaps due to cost and ability to deliver that. So cost is another one. Until we can show the costs are beneficial, convincing even a small exploration firm. So critical minerals start usually with a 3 to 10 man exploration company. They go out into the middle of the desert, drill some holes and find whatever they want. Trying to convince those guys who are geologists and finance people that they need to use blockchain and the benefit there, that's tricky because they need to spend all their money on getting out and doing stuff. I think the final one is necessity and the final, and then ease. The easier we can make it, the better the take up will be throughout the supply chain. So that's the first one. And then necessity. At the moment, there is no legal necessity for people to do this. There's no legal necessity that shows them that they have to there's requirements and there's peer-led suggestions around ESG, but I could fill out a piece of paper that says I'm ESG compliant. It doesn't necessarily make it true. So until there is a piece of legislative paper that says this is required of you, you'll always find people who are going to find a way of getting around that. And I think that's across, it's not just mining or critical minerals, that's across all industry. And so I think at some point there needs to be some global push to having very transparent supply chains. And the only way you can do that is through blockchain. Blockchain is the key for delivering that transparency. But there are lots of issues and barriers that are in place that are going to stop smaller companies from taking that on.
Doug, would you agree to that, or have you seen other things?
Kind of. Certainly, there's huge asymmetry in resources. The approach that we've taken is a tiered subscription model where the downstream actors, the OEMs, pay the most, midstream actors less, and the smallest upstream producers pay nothing. And the reason is, of course, that the benefits of traceability accrue at the downstream, and that's therefore why they should be paying for it. So different commercial models. I totally agree about the economic capacity of actors and the perceived complexity of the technology, but there are ways in which you can address this with different commercial models. The other thing is that quite often we don't talk to customers about blockchain. It's one of a number of technologies that we've used to develop our platform. And sometimes I'm even asked at the end of a pitch why we chose not to use a blockchain. And then, of course, we admit that we do. We're built on Hyperledger Fabric. But the reality is that most of us are very happy with how our mobile phones work, even though they're quite complex, without understanding all the technologies that are involved in it. And I have to say, I'm quite pleased we're not all talking all the time about the underlying technologies just because they're new. As we start to engage with business customers, I'm not finding the fact that we're using the blockchain on our platform as an impediment to our growth.
Good. We were talking about the push. Jeff mentioned the need for legislation. Gemma, you set up the first fossil fuel-free pension fund in Australia. How important is the investor expectation in all this discussion about moving towards sustainable supply chains?
I think it's fairly fundamental. I mean, I was speaking to one of the big 4 banks in Australia today, and they were explaining to me how for every portfolio that they finance, underwrite, advise in, they're basically articulating a pathway to net zero. So every aspect of its banking activities are going to be overhauled, and supply chain is another part of the work that they're doing. So I think that, if capital markets, change their mind about what they're going to fund, then, if that is very much, market shaping, and also leads to, early closure of plants and assets and new assets not being funded and financed and being built in the first place. So I think, the axis of the future of these industries turns on, the capital markets. Mm-hmm. And you can see now that so many choices around like ESG funds. I mean, there's a very diverse landscape in terms of, what is in the content of them. But I think in terms of supply chain, it's still very nascent in terms of differentiation from a, capital perspective. There's a few areas for which it's well known, but I think, it's by no means comprehensive, and, we haven't seen the change that needs to occur in supply chains for them to be really sustainable.
Mm-hmm. We've now seen the potential of the blockchain. When we bring products onto the blockchain from source to consumption, where are there any limits, or are there no limits? And if yes, where would these limits be? It's a question to all of you, maybe Emmanuel also from
Let me have a go. So obviously what we're doing is tracking raw materials from a mine into, for example, a battery in an electric vehicle. And unlike a tuna steak or a diamond, a bag of rock doesn't have a unique identity. And so you have to have an effective way of creating a reliable digital twin that represents this bag of rock. Now, we're working with 30 kilo sacks of cobalt ore in the Congo, all the way up to 200-ton parcels of nickel or nickel sulfate coming out of industrial mines in Australia. So what I'm describing to you can work in a number of circumstances, and clearly the circumstances dictate how you do it. But and the challenge, of course, is that material will then undergo amalgamation with other materials, smelting, refining, further amalgamation with other materials before it gets incorporated in components. So the ability to create a digital thread has nothing to do with the blockchain. That's where you notarize the transactions to. It has to do with the way in which you might employ, IoT tags alongside machine learning and perhaps even traditional databases, which are hashing key values to the blockchain in order to create a complete solution. Blockchain of itself, certainly in the examples that I'm just describing here, doesn't solve the problem on its own. What it does do is create distributed trust.
Mm-hmm. Jeff?
Yeah, well, I completely agree with what Doug's just said. Absolutely. And where there is not failure is the wrong word, but where blockchain can't solve the problem, there are other things that can. So, for instance, to add to that, people are now using satellites to track constant 24/7 tracking of carbon and shifting of mines, etc. So there are other ways of adding to that and providing, a more rounded overview of what's going on. But again, without the blockchain there as the spine, it's almost impossible to do properly.
Phil, you within your life with Dragon Chain, you have a solution whereby you have NFT tokens which track the supply chain. Is there anything you can expand on there, how that works? Going back to Doug's issue of you have to somehow create your 30-kilo bag of cobalt or whatever, to be able to make it traceable.
Well, that's a tough one. I do want to, because I forgot to mention, we also have created a zero carbon footprint with our chain and almost zero energy, negative energy usage with our chain. So we're, very friendly to the environment through our unique architecture. So I left that out earlier. NFTs is really such a new area, right? And so how are you going to create an NFT to track a bag of rocks and stones is, one thing. I think the more important thing is being able to, again, understand that before we get into the weeds on tracking a bag of rocks, we need to take a macro approach to these supply chains and go after the 80 or 90% that we can effectively fix and monitor and manage and change, and apply NFT technology to 90% of the supply chain, and not be overly concerned with that 10% that can't really be managed because it's a small artisan out there in the field. And that's where the 30% savings comes in supply chains. It's by effectively addressing the entire supply chain and knowing where to apply an NFT, where to effectively deal with interchain, moving from one chain to another, and where to, and understanding those disparate systems. So it's not just the NFTs, it's the whole picture. Mm-hmm. All of these new technologies bringing together is what the answer is. Mm-hmm. And we're doing all of that. Mm-hmm. We're a leader in NFTs, we're carbon neutral, disparate systems, complexity science, all that's designed to help the environment, give everyone proof, and fix these gosh darn supply chains that are backwards and upside down right now. And we're doing it all with blockchain. So
now a question from the audience came in, which sort of fits into this. Can we talk about interoperability of the distributed ledger technology and the technologies? I understand the technologies as being the traditional technologies. So if you have supply chain, and how does it link in with the systems?
Yeah, can I answer that?
Definitely.
That's our sweet spot. That's what we're all about at our blockchain. First off, it made my day. Great question, because this is what we live for. Because like I said earlier, it's about interoperability. Now, we have a very robust patent on interoperability. Now, interoperability might not sound real sexy and cool and fun to talk about. But what slows down supply chains, what hurts supply chains, is their inability to interoperate. Because they say, well, we can only interact with the supplier, the software and systems that we have access to. Well, guess what? Your answer might be in another system. So how do you interoperate with that other system? Well, brilliant patents have been secured at our end on how to jump over into or interoperate with those disparate systems. That's why this is such an exciting question. It really solves the supply chain. That question really solves the supply chain problems because you've got the blockchain, in our case, the patents on the interoperability. So you've got that disparate system thousands of miles away, but it has the answer in that system. Well, the current supply chain says, we're over here in our office, we don't have access to that. Well, you can have access to it, but it takes a very complex interoperability tool, which we built out. While everyone else was asleep at the wheel, we went out and built that out. And then also, there was one other thing I lost my train of thought on this interoperability. Oh, and someone else mentioned earlier about blockchain migration of the chain, and this kind of dovetails onto interoperability, could be hard, right? And why is that? Well, it's because people find blockchain to be hard. Well, we're 3 clicks in less than 10 minutes. So this isn't a pitch. These are just facts. We're 3 clicks in less than 10 minutes. And so what I tell people is you can have rich and robust quantum encryption, a world-class blockchain that specializes in interoperability and interchain and many other things in 3 clicks or less than 10 minutes. And so you get all of that today on our blockchain. I'm not trying to just say, well, we're the best, but on our blockchain, it's 3 clicks. Now think about that. If you're sitting at General Motors or you're at Walmart and you're pulling your hair out over the supply chain, we have all the answers built out, and we're 3 clicks in less than 10 minutes. And you're there. Okay. Off you go. It's problem solved.
Sounds great.
Could I chime in, Katrina? I think in the case of energy, there's a lot of talk about interoperability, and with some of the blockchains, it's absolutely needed because the layer 1 blockchains are not able to deal with the scale that is needed for energy transactions. And so Powerledger just moved away from a blockchain that was based on Ethereum for recording energy transactions to, we've just adopted a Solana-based blockchain called the Powerledger Energy Blockchain. And it has the capacity for over 50,000 transactions per second, whereas Ethereum could only process 10 to 12 transactions per second. And the Powerledger Energy Blockchain is a layer 1 blockchain that's designed to scale, so it doesn't require an additional layer 2 or sharding or interoperability to scale. And all these things really create additional friction and cost and risk. And in terms of the energy piece, obviously the proof of work blockchains are very energy intensive, but this is a private consortium chain, and it actually is super low energy. I think in terms of, basically we've got a multi-threading technology plus some other modifications that we've made, and it makes it super energy efficient. So it actually uses 0.000027 kilowatt hours of energy per transaction, and it's super cheap. And I think that's really important as we move from energy markets, which might be 30 minutes intervals down to 5 minutes. So you're just going to have a lot more transactions, and people are going to want to connect and settle on chain, and this makes it actually possible and really conceivable. So I wouldn't say that we're acolytes of blockchain. In fact, we get asked all the time, can't you do this without a blockchain? And often we'll say, yeah, absolutely, you can, in the same way that you can run a supermarket without barcodes. You don't go to the supermarket because I'm going to this supermarket because it's got barcodes. Nobody does that. But you go to that supermarket because it's got great stock control, and the food's not out of date. And when you go through the till, the bill's accurate. It's not been manually entered with mistakes. So there's a whole range of experiences that occur in a supermarket that has barcodes in it. And I think so it is for energy, very complex things at scale, new markets that involve lots of users with low value transactions, and the complexity, having a blockchain will just make it be more efficient in the background. And you could do many of the things without a blockchain in the same way you can have like a corner store supermarket and buy milk without barcodes.
I think that's a lovely picture which you painted. Thanks, Gemma. I'm very conscious of the time and the fact that there would be a lot of additional questions to discuss. I think we could go on for another half an hour, but I'd like to put one final question to you all, also in the context of the fact that we're holding this panel during the United Nations General Assembly. Do you think for each of your experiences, are the policymakers addressing the problems of the supply chain in an adequate manner? We're talking about them being quite hands-off, but getting more hands-on as it comes. Are these the problems, in your view, which the policymakers should be addressing at all? Are they addressing the right problems in the market? Maybe, Gemma, you go first.
Well, in the case of energy, you've got existing energy markets like wholesale markets, and then you've got these new market layers which are emerging. So local energy markets where people you're supporting generation and consumption being close to each other. So local marginal pricing or local value pricing. So you basically charge a lower network fee the less the energy, the less the distance the energy travels. And then you have emerging flexibilities markets, which is where a network, an electricity grid operator, instead of upgrading its grid because it's got like a issue around congestion on the grid or an issue of voltage or reactive power, where it would normally upgrade a substation or a transformer or a capacitor bank with millions and millions of dollars of spend, it could actually contract the services of distributed energy resources, so solar farms or batteries or factories that could change their energy load profile to deal with that congestion or to deal with that voltage or reactive power issue and avoid the need to do the costly upgrades to the grid. So it's interesting because it's actually using can you hear me?
Is it me?
Can you hear me?
Yes, Gemma, we can hear you.
Oh, great. Yeah, so it's using variable renewable energy to solve the problems on the grid that it actually creates. And so it's actually creating new markets that don't exist and doing that in a way that is really efficient. And also the crypto settlement piece, I think, is not something we've really talked about, but that's becoming very exciting, particularly in markets where there's a lot of endorsement by regulators of stablecoins. So in the US, the USDC, more than $25 billion of values sitting on that digital stablecoin, and the company behind it's going to list on the NASDAQ, and that is actually bringing it into mainstream acceptance. So we're now talking to like energy aggregators that want to offer crypto settlement as a way of enticing people to join them, and incentives paid in crypto. And so I think that this used to be like a very niche thing on the side, but you can start to see it's entering the mainstream. And that's where the real power of the blockchain, I think, gets exciting, because you can have trade and financial settlement as one entry on the blockchain and create, you know, real-time trading or intraday trading and settlement, you know, on chain.
Can I jump in whilst we're waiting for Katrina to come back? So just on the political side of things, and given a little bit of political background I have, I thought I'd jump in on this question. So if we're going to do legislation around this, it has to be industry-led, I think is the key. And it has to be part of a wider ESG drive, because having it as independent in certain places is not going to work. Equally, ESG without blockchain simply fails. I asked the question, you know, as a world, we're trying to move towards electric vehicles, renewable energy, a green economy. And why are we trying to do that? We're trying to build a better tomorrow. But we can't build a better tomorrow if we accept irresponsibility today. And the only way that we can show that and demonstrate it is having independent, transparent blockchains. And you know, that is only possible with you guys there and being supported at a governmental level. And those legislative requirements, because of the global scope, being accepted internationally.
Doug, anything to add from your side?
I said that we work in the battery space. Well, you know, in Europe, we have the EU battery regulations. Joe Biden has just been signing executive orders around resource security, particularly around battery materials. So I'm in the fortunate position in that, you know, in the markets that we seek to serve, regulators are doing everything I could possibly ask of them to create an environment where solutions like ours will gain traction. But of course, the driver for industry is partly, and this point was made very eloquently by Jeff earlier, it's partly investors and, you know, lenders to corporations expecting to see meaningful evidence of ESG performance. Clearly, consumers also have a choice, and some brands, you know, an example might be Volvo or perhaps Polestar, actively using their sustainability and ESG credentials as a driver of top-line sales growth. So, you know, regulators is part of it, and in our space, it's obviously very helpful because the energy transition requires resources.
Emmanuel, anything from your side on policymakers?
I mean, if I might just chip in something there. I agree with what Jeff said about it being very industry-led, and I think that makes sense. I think when we begin to see more and more companies adopting blockchain technology for supply chain, I think it would then inspire the kind of regulations that would help in this space. Specifically, I know that there are industries that have been for some years saying that they're trying to improve how ESG efficient they are, trying to say we are less energy expensive than we were 2 years ago, than we were 5 years ago. And I think that blockchain technology is that technology that is providing, that shows the most promise in taking them that extra 5%, 10% forward. And I think with that rise in energy efficiency and more ESG efficiency, then we would see better, faster response to regulations in this space.
Thank you very much. Phil, obviously you became active without needing a regulator to push you. How do you view the regulator's role in general with regard to the supply chains?
You know, I really, you know, I support regulation, but to me, it really seems to be in the way right now, because there needs to be this marriage between the regulation and industry leaders that are out there, these people that are rolling up their sleeves, building these blockchains, and those that can demonstrate that they are improving the environment or improving cost, or fixing supply chains, and doing all the right stuff. It's important that regulators take all of that into consideration instead of just regulating. So regulation just to regulate never works. History shows it never works. But regulation can be very effective if they allow the innovators if they embrace the innovators and then put a little regulation around that just to keep things going forward. But embracing the innovators, if the regulators can make that their first priority, I think things would work out well.
Perfect. I think this is a perfect last sentence for this session. We've been at the in the context of the United Nations General Assembly, so the regulators had the chance to listen to you, to embrace what is possible and what is not possible. We have run out of time. I would like to thank you all very much for participating in this panel, wishing you a lovely day ahead of you, and hope to speak to you at some other point in time. Thank you very much.
Thank you.
Sophia, over to you.
Thank you all so much. We'll resume shortly with our next panel. Hi, everyone. Thanks for being with us. This is the GBBC's Blockchain Central UNGA. We are about to kick off our next panel on the future of money, what happens next. I'll hand things over to our moderator, Eva, to get us started. Thank you.
Thank you, Sophia. Good morning, everyone, and good afternoon if you're like me in London. My name is Eva Salai. I'm currencies correspondent at the Financial Times, and I will be moderating today's discussion, which hopefully will get really lively and we'll get lots of questions from the audience as well. First of all, I'd like to ask our panelists to briefly introduce yourselves, and if you could just outline in a few sentences, what do you think is wrong with money today? Maybe we could start with you, Andre. We'll go in alphabetical order.
Thank you, Eva. Good morning, everyone. Pleasure to be here. I had the digital assets division here at BTG Pactual. We are the largest investment bank in Latin America. Okay, so very difficult to summarize of what's wrong with money in a few sentences, but I would say it's maybe the lack of care that our, let's say, financial authorities are having with our money, if I can summarize it.
Thank you. We'll come back and unpack these points a little bit. I won't be forcing you guys to pack this huge problem into 2 sentences. That would just cruel. Next up, Fernando, could we come to you, please?
Hi, Yifan. Thank you for having me. I'm the founder and CEO for QR Capital. We are a holding company that invests in blockchain cryptocurrencies business here in Brazil. We have the QR Asset, which is the relevant asset management company here in Brazil that launched the first Bitcoin and Ethereum ETFs in Latin America. I think basically the answer for the question is that money is not digital yet. So if we give some perspective about Brazil, Brazil is a huge country, over 200 million inhabitants. So we see that there's still lots of space to make money digital. We still have lots of transactions that are done with paper money, with paper cash. So I think it's maybe one of the last industries that did not move to digital yet. So it's a huge challenge in developing countries.
Thank you so much. Elsa, can we come to you?
Yep. Hello, everybody. My name is Elsa Madrol. I'm a managing director for a blockchain security company called Coolbits. We've got two lines of business. The first is a series of hardware wallets that are designed for the retail market. The second is a suite of AML compliance services for virtual asset service providers called Cigna. And one of those core services is providing travel rule compliance. So that's helping exchanges and custodians fulfill the requirements to securely exchange personal information during crypto to crypto transfers. That's a new requirement. I think it's going to be interesting to discuss in the context of what happens next. It's being rolled out by regulators globally after the Financial Action Task Force made it mandatory to fight money laundering. So in terms of the issues with the money system today, I'd say our central bank system has overstretched itself in the last 20 years, crisis after crisis, and the concept of trust, which we will unpack.
Thank you so much. Thank you so much. Can we come to you, please, Makoto?
Yeah, so I'm Makoto Takemiya. I'm the co-founder and group CEO of Sora-Mitsu. We're a Japanese fintech company that specializes in blockchain technology. Some of the projects we've worked on have been a CBDC for the Central Bank of Cambodia. And also we contribute to many open source projects like the Hyperledger Iroha blockchain and a decentralized economic system called Sora, a DEX called PokerSwap. So we do lots of cool things like that. I would say the biggest problem with money today is centralization. And I mean centralization in both the kind of the creation and allocation of money and then maybe also the infrastructure as well.
Thank you. I would like to first sort of unpack the idea of why is that nearly a quarter of the world is unbanked at the moment. You know, we have had this system that has been in place for a very long time, and perhaps in countries like in the UK, it's easy to forget how many people are living without the services that we take for granted. Is technology going to be a silver bullet for this, and why? Who will be brave enough to take on the question? Go on, Andre, please. I can see that you.
Yeah, I can start. Basically, I mean, following the lines that Fernando mentioned. Okay, that some of the analogies that I do here is that our money probably it's is digitized already. Not everything about money, but some part of it's already digitized. But it still works in a, I would say, analog frame, okay? And that's another, in this process, okay? First you digitize, but we're still using the same, I would not say infrastructure, but the same steps and framework that we used to have when we lived in an analog world, okay? In an analog and physical world. So most of the steps and functions that we do currently, even if you're already dealing with most of digital money, we still follow the, let's say, framework of an analog world. In the great, let's say, leapfrog is to move that to a digital framework as well, okay? And that already happened with most of our lives, okay? Communications, information, and so on. But again, like Fernando mentioned, it didn't happen with money yet. And once these happen, and there's a lot of ifs in this, when this will happen, I think it's not if, but when, but the process that we will have to go through to reach the destination, it's not clear yet, but definitely this can help solving all the problems of, not all, but most of the problems of unbanking people. It's I would say it's pretty much like the same process that we have in other industries with the internet. It's just that when we are dealing with money, things it takes a little longer, and I think there's some reasons for that. Okay, when we deal with money, we're dealing with people's pensions, with people's lives. So you cannot adopt the let's say move fast and bring things framework. Okay.
Thank you. And by the sort of digital framework, and we'll come to you, Fernando, if you don't mind. What does digitalization solve, and you know, what does that framework do you think looks like that you and Andre have sort of touched on?
Yeah, I think the digitalization has advantages, but also has risks, right? So looking at the good part of it, I think it's very important that you bring the settlement of transactions to the digital world. So you may build new business models that will come from that, right? So if you think about the way that we usually associate the future of money by talking about micropayments, right? But the impact is much broader than that. You have much to be done with money that's related to bigger transactions and the automatization and the digitalization. We talk a lot about DeFi and new business models related to how you can bring digitalization, smart contracts, how you can program the relation between two counterparties in a financial transaction. So there's much to be done additionally to micropayments, right? So in my opinion, this is the good part of it. So how you can bring bigger efficiency to many parts of the market. I would say that's not only about micropayments, but you have strong opportunities related, for example, to the capital markets and other parts of the market. So you have lots of intermediates, lots of opportunities to make the processes more efficient, right? From the risk part.
Yeah, sorry, go on. Tell us about the risks, and then I'll come in.
Yeah, from the downside part, or from the risk part of the digitalization, I would say that digitalizing money, and I think the end of physical cash will happen maybe in a few decades or very shortly, in a very short time frame, brings some risks. And I think the big risk is more related to privacy, right? So there'll be great amounts of data. So, and this great amount of data will demand a lot of ethics on how to use it, right? So if you bring those physical transactions to the digital world, there will be lots of adaptations needed to that. So I think that there's much to be done in the regulatory side on how to implement that. It's not only about digital or technology infrastructure, but also about regulatory infrastructure, right? So you definitely need to plan that in a formally way to make sure that the implementation guarantees that the transparency, the privacy of transactions is something viable in this new digital model, right?
Thank you. Elsa, can we come to you, please? You mentioned trust, and that sort of ties in nicely with where we're at the moment. How much of an issue do you think is the lack of trust, or maybe a fear of technology? Can you tell us a little bit about how far down the line regulators and potential people who will use such payment systems or blockchain technology, and it's one of its guises. How far are we down this sort of process of learning to trust this new system?
You mentioned the UK earlier. I don't have the statistics on the UK, but I do have some interesting stats on the US, which, you know, what was surprising. I was the first to be surprised because to me, the US is one of the most developed nations in the world. You wouldn't think that there'd be an unbanked problem and, you know, reluctance to technology and that kind of thing. So this is just very recent. This is just last year when the US is proposing the $2 trillion economic stimulus package with COVID. They wanted to send out checks to American taxpayers. Any American taxpayer that might be facing an economic hardship. The complicated question of how to get that money to the non-taxpayers was a problem. So it was estimated that 44% of American citizens do not pay taxes. They don't pay federal income taxes. In some cases, they do file a tax return, but the income is too low, so they don't pay taxes. In other cases, they just don't file a tax return at all. You're talking college students, dependents, disabled adults, you know, pensioners. So the Trump administration's response was to create a simplified tax filing requirements for individuals for the 2019 year so that they could receive their stimulus check. Again, a huge problem for a lot of people. The Federal Deposit Insurance Corporation estimated that 6.5% of Americans remain unbanked. So that's 8 million households in the US. And that's a population that's even less likely to file tax returns, obviously, because they don't have a bank account. So those are the households that are, you know, going to be most likely to be the population, of course, without adequate health insurance. So getting relief to those households quickly, safely continues to be a monumental emergency. And, you know, the administrations have not met those needs elegantly, even in the United States. Now, obviously, one of the most remarkable use cases of blockchain is the possibility of creating, you know, virtual currency, virtual accounts, some kind of token of exchange. But, you know, and that's obviously one of the United Nations goals of financial inclusion. Regulators around the world have recognized this and are insisting the regulation is not there to stifle innovation for that very reason. But if we can't even get it done in the US, the chances of actually rolling that out globally are very slim. So there was a version of the US stimulus bill that I'm talking about that made a push for the creation of a digital dollar platform. It was backed by some powerful Democrats, and it was abandoned for these kind of tax identities because largely, you know, partly because of the wallet issue. They wanted to issue the wallets. They wanted to own the wallets. That presents a whole host of complications. And, you know, as I said, obviously, if the U.S. is facing these challenges in regions like India or Africa, where you've got multiples of that unbanked population, you're going to have a much higher risk of that. Just to unpack the concept of trust. So trust really, to me, it comes down to what's been the problem with money. It's the role of central banks over the last 20 years. You know, we've had a number of crises that the central banks, particularly in the US, leading the charge, but central banks around the world have reacted, you know, drastically cutting interest rates around the world. But the 2000 stock market bubble triggered a chain of events that would lead to the 2007 bubble that burst in 2008, and then the crisis of 2010. So we're seeing quantitative easing on a massive scale globally. And now with this shock of the pandemic, I believe that hyperinflation is inevitable. The central banks are playing that down, obviously, but the trust is eroding. And that concept of trust is a problem because we're no longer, you know, ever since we've abandoned the gold standard, money is trust, and it is nothing but trust. And so there's no early warning sign of a systemic money failure the way that you would when you start running out of gold, for example, when you still had gold backing. Trust is all or nothing. So the minute the system, you know, we stop believing in the system, and something like hyperinflation for a prolonged period of time has never really been tested in recent times. But, you know, what we do know is that a failure in a monetary system would be massive and unpredictable. I think the reality to manage money supply and interest rates by central banks today is actually quite limited. We're hoping that they've got all this power, and they've got the power, but the impact is actually quite limited. So, you know, what's wrong with money today from a trust perspective? I think even keeping cryptocurrency out of the equation, I think it's the risk that current events are foreshadowing a collapse in the money system. So printing money almost leads to the collapse of a currency, and that's what I'm worried about.
Thank you so much. I would like to come to you, Makoto, and ask about central bank digital currencies, because what strikes me is that, central banks, according to the panel, are very much part of the problem. On the other hand, it feels like the world is also looking to them for a solution with the central bank digital currency, which is a bit contradictory to me. Could you sort of maybe expand on how we can think about this question and maybe tell us a little bit about why central bank digital currencies would be any different from the currencies today that central banks are using?
Yeah, so this is quite a deep topic. I'll try to be as concise as possible. So there's many forms of CBDCs, and I'll just say that when people think about CBDCs, they may get this image of opening an account directly at the central bank and being able to transact directly there. But that's actually not the most typical form that I think we'll see. Most forms will still be intermediated by commercial banks or other licensed institutions that provide customer service and onboarding, things like that. And from that perspective, a CBDC is really a digitization or extension of cash, really for, well, I'm most familiar in the retail payments space. And so for low value retail payments, it's just a way to kind of send money as easy as sending an email. And I think the world has really digitized a lot. I know since I graduated from university, almost 15 years ago, maybe. I'm not that old yet, but the world's changed quite a lot, right? So everyone's online. In countries that we work in, like in Cambodia, I would say upwards of 70% of people have smartphones now, which is quite amazing, right? Everyone's really connected. And from that perspective, having something like a bare asset that you can just move around and you don't have to worry about counterparty risk or, what happens if my bank fails, things like that are just kind of obvious, right? Now, the role of a CBDC in monetary policy and the different potentialities there is really a deep topic. And you do have to worry about issues like privacy. Trust is not as big an issue with CBDCs because people generally trust the central banks just because they are part of the power complex, in any country. And that has quite a lot of, value there, or even if they don't have value in many countries, they could have a monopoly in violence, right? That would give them the power needed to do what they want. Not saying that's a good thing or not, but CBDCs really are not a panacea for economic woes. So you can't just hit some buttons and airdrop money to lots of people. So being in the cryptocurrency space as well as an enthusiast, I can tell you that airdrops are a really bad policy. And I know that from firsthand, even it's terrible monetary policy. But I do think that CBDCs do give the possibility of targeted influence. So being able to observe the economic activity that's going on, hopefully that's pseudo-anonymous, so you don't have everyone's details and you don't lose too much privacy. But at the same time, it's still important to kind of see, what are the values being transacted? What's the velocity of M1? Being able to observe this in real time can give central banks some indicators that they need to do targeted monetary policy before a big crisis happens. And for example, inflation, looking at waiting for quarterly CPI is not really what you want to do. You really want to have real-time data, real-time feedback into the system in order to prevent a crisis. And that's what central banks hopefully can do with the CBDC. That being said, not many countries have done a CBDC so far. Our work in Cambodia is one of the first. There's other notable examples as well, like the Bahamas, for instance. And these are really exciting to watch. But I think it's still very early, and it's very much in the research stage, and it's not even close to replacing physical cash, which I think is great. You don't want to replace cash. You want to reduce cash because cash is expensive, and it's it doesn't tell you much about economic activity, so you can't really do much analysis. But at the same time, you need cash as a fallback and to give universal inclusion.
Is it a problem do you think that some countries, China, for example, and the Bahamas you mentioned, are very advanced, relatively speaking, in their CBDC projects, whereas you have the US, which is thinking about it potentially, the EU, similar position. How is that going to play out? We mentioned earlier the sort of new systems that are required, the digital systems. How will this all hang together?
Well, I think that really not just monetary policy, but monetary instrument usability or UX, user experience, right, is going to be a more and more of a deciding factor in the kind of the currency zones in the world. So the currency people choose to transact with will be the one that has properties like stability of value and ease of use, good APIs, low regulation. These are, people are going to have a big marketplace of digital currencies to choose from. And I don't just mean cryptocurrencies, like Bitcoin, but also different CBDCs that expose APIs to varying extents and allow people to transact, just by having a phone number. This is going to be really inclusive, and I think currencies will have to compete on the usability.
Thank you.
So,
yeah, sorry, go on.
So I'll just say that, yeah, the US is somewhat lagging behind for many historical reasons. And that's always the way it is with an incumbent in an innovative space. That doesn't mean that they can't, catch up. There's a huge amount of, talent, a huge amount of money. It's really a lack of willpower, I think.
Thank you. Andre, you were nodding your head. Please come in.
If I can add to that, there's two different views on these. First, that I think that the central banks they start trying to catching up after, I would say, the Libra wake-up call, okay? Because until we have, let's say, for their perspective, a bunch of nerds in their basements developing some weird cryptocurrencies, okay, leave them play around, no problem. But once you have a company with 2 billion clients potentially issuing a form of money, then everybody starts to hurry up and, okay, guys, we need to do something, right? I think that was the beginning. And although there is a lot of risks that I see in terms of privacy, like Fernando mentioned, and also more, let's say, control things like we probably see in China regarding CBDCs, okay? Every technology you can use in a good way or in a bad way, okay? It's not about the technology, it's about how you use it. But if you take the example here in Brazil, although we have all these privacy issues that people need to sort out, the society needs to sort out how it's going to deal with these matters. There's also the big impact that you might have on the banking systems. But looking to the Brazilian case, and like Makoto said, we have more cell phones than people. And we have a quite sophisticated financial market in Brazil. In Brazil, you already have like instantaneous payment 24/7, right? But you still need a bank account to do that. So the beauty, and that will depend a lot on how these frameworks are built. And Makoto can correct me if I'm wrong, but if you can really bring some sort of decentralization for the CBDCs, then you can try to sort out the unbanking problem. Because I'd say in Brazil, we have the technology. We're already doing this, okay? But you still need a bank to use it. If you, through a CBDC, you can give some sort of decentralization where companies and people can build applications and can solve or try to solve the unbanking problem, then we're going to see, I think, massive solutions and maybe tackle the problem. And again, if you take like digitization, dematerialization, and decentralization, the decentralization is what brings the real innovation and the exponential growth, okay? So as long as people can bring that to CBDCs, we're going to have huge solutions for the unbanking problem.
Can I just ask at this point, because this is the contradiction that I'm struggling with, that we're talking about a technology that the whole idea is that it's decentralized, that's why we're talking about it, I guess. On the other hand, it feels like there's a lot of waiting for central authorities, such as a central bank or a regulator or someone very much not decentralized to do something. Can one of you maybe help me sort of deal with this?
Well, I don't want to talk too much, but I'll just say briefly that I think in the cryptocurrency space, there's lots of really exciting experiments going on. So Bitcoin really, didn't have the concept of rational monetary policy. It was just, let's mint at a given schedule, and that doesn't have the flexibility that human society really needs. And traditional banking system is actually very flexible, because the way correspondent banking works, the way credit creation and destruction works is really quite elastic, right? And newer cryptocurrencies are kind of playing with some of these ideas. So I do think that there's some hope that maybe not in a major economy anytime soon, at least, but at least in developing countries, you could get a more socially optimal solution through some kind of like supranational governance-based cryptocurrency than you would by like a centralized system that's controlled by local government.
Thank you. Mobile phones have come up quite a few times, and we've sort of touched on how many there are, and almost everyone has it everywhere in the world. Wouldn't it make sense to just use that technology, which is already out there, rather than trying to roll out a whole new system that everyone's just sort of feeling their way into it? People have mobile phones in their hands. There's digital money. Away we go. Fernando, can I come to you and ask you?
Yeah, I can. There's a very interesting project that happened in Brazil. It's an instant payment project called PIX. It's a project that's carried out by the central bank. It's not blockchain project. It's actually integrating the banking system. It has over 100 million users. It was a very interesting test that happened in the Brazilian market, because basically from the user perspective is quite the same as having a payment wallet in your cell phone, right? Because it's 24/7. You can do transactions with a QR code. It's instant payment. So it's absolutely from the user side, the same thing as having a digital currency, right? And there were some learnings in the implementation of the project in Brazil that are really interesting to explain this point we're discussing here about why somehow you need a central authority, rules, and somehow controlling the system, right? Recently, it happened like 2 weeks ago. The central bank decided to do some changes, practical changes in the payment system, right? Basically, they understood that there were some risks related to the 24/7 payment window. They changed the rules for time and for a quantity of money that could be transacted in the night, during the night period, because they understood that there were some risks for kidnapping and other kind of crimes that were happening, and that were using this kind of payment system to make the payments, right? So that was a change that happened because there was a practical consequence in the day-to-day of the users, just basically because you had a way to make instant payment 24/7, right? I think the way that some blockchains are conceived without having a central authority scares the government, scares the central banks a lot, because you don't have the flexibility to make this kind of change, right? So I totally understand, although I am a very strong enthusiast of Bitcoin and other kind of crypto assets, those anarchist features of some blockchains they probably will be limitations for their deployment as micropayments, right? So the regulators will come after and they will have a role in try to controlling that, right? So this practical project that happened in Brazil, it's 100 million users, so it's a huge project, right? So it's very massive. Gave us some insights about how in a high-scale country like Brazil that happens, right? And we understood that, unfortunately, central authorities have some kind of role in controlling this kind of deployment, this kind of implementation. And I think this is something that somehow proving that the regulation is necessary in this field, especially related to micropayments.
And the adoption was huge. I mean, the decision started last November, right? Fernando,
It was November 2020.
Yeah, we are not even a year. Exactly, not even a year. No. It's as simple as that. This is my bank wallet, okay? If I want to receive money instantaneous, it's just a QR code, or people can even use my cell phone or my social security number to send money. It's amazing, but it's still a centralized system.
That sounds fantastic, and I mean the scale of it is quite staggering, actually. Elsa, can you tell us a little bit about the sort of security side of things and the risks around that? Because I imagine there are a number of issues around whether it's 100 million people using something new. There could be scams, or there could be issues with, you mentioned AML, KYC before. So can you give us a little bit of an update of where we're at compared to these great projects?
Yeah, I think I'll take a step back and take it from the regulator's point of view, because the regulators are trying to get a grip on blockchain technologies for sure, but mostly aligning the rules for traditional finance to any kind of digitization, whether it's through telephones or through blockchain or whatever. I can point to the problem that I'm familiar with, which is the problem of the travel rule. So the travel rule, which is an American term by the BSA, is the mandatory exchange of personal information when you're making a transfer. So let's say make a SWIFT transfer, you have to exchange personal information like your name, your address, etc. Obviously, that didn't exist in crypto. On the back of kind of looking carefully at AML risk, the Financial Action Task Force proposed, actually recommended, and these recommendations have to be implemented by the 200 plus nations, national regulators, that exchange-to-exchange transfers of crypto, for example, now have to have, regulators have to implement some kind of travel rule requirement as part of their licensing requirements. So suddenly now you're not anonymous anymore. You have to exchange personal data. How do you exchange that stuff, securely? And it was first, there was a huge backlash from the industry. And then there was innovation, right? Because that's exactly what happens. If the regulator pushes, the immediate reaction is no. And then people figure it out, and then there's innovation. Now, one of the issues there that I think is applicable to what we're discussing is that in that part of the industry, we call it the sunrise problem, which is the fact that FATF is an overarching organization that has 200 plus national regulators as part of it. Each regulator is now responsible for creating its own individual regulation rather than one global regulation. And so each regulator has its own agenda and is setting certain thresholds at certain, so that's making cross-border remittance very complicated. It may work in Brazil for Brazil, but I don't know if that project you're talking about is actually cross-border. Once you get cross-border, if you've got a whole bunch of different regulators regulating something that's similar in a slightly different way, the cost to actually implement compliance is way, way too high. So we're working, that's something that I hope to see is some kind of passporting, right? Is if you're regulated in Singapore, then that passports into the US or into the EU or, something to that effect will help digitization generally. It's definitely one of the big issues.
Thank you so much. On the point of global versus domestic, at the moment, obviously fiat currencies, very much controlled by central banks and then their national items. Crypto seems to have a very different setup in that it's very global. But with CBDC projects, we are seeing the emergence of these conflicts of regional versus global. How do you think that's going to play out, especially in terms of the CBDC side? Will there be one dominant currency? Will it be sort of that will dictate the infrastructure, or will there be quite a lot of diversity? Maybe we could come to you, Makoto.
Yeah, I think the trend is to have a lot of diversity, and instead market-based solutions that would be private company-based or financial institution-based would build kind of the links between them. And I'll just give a quick example of what I've seen in Cambodia. With the Bakong system, Maybank, which is a Malaysian bank, has a office in Malaysia and of course in Cambodia as well. And they just started a money transfer service from Malaysia to Cambodia using the Bakong system, where they do all the internal management of their treasury kind of themselves, but they offer really cheap rates to the user because they're able to use this new infrastructure. And I think we'll see more and more of that. And I think from the user standpoint, it's going to be eventually as easy as sending an email. You just type in an amount, hit send, and it goes. You don't have to deal with all this problem.
Thank you so much. We are getting very close to the end of our time. We do have one question from the audience. Thank you for that. We'll try to answer that quickly. We'll probably have many monies, cryptos in our wallets and use them for different purposes. Is there a chance that governments will rule out that possibility, or I guess, monitor what we spend these monies on, or even say, no, you can't do this, you can't do that? I suppose it's a question about data and control. Is there any brave panelist amongst us who would like to come?
I can make a comment on what is a wallet. There are two concepts of wallets. There's hosted and unhosted wallets. And so if it's a custodial wallet, the example I was giving of the US government potentially considering a bill to roll out money through wallets, they wanted to be the custodian of the wallet. And custody basically means who owns the private keys. If the government owns your private keys, yeah, you bet they can control what goes in and out and limit. They basically own the wallet. So that debate of hosted versus unhosted ties back into regulation. Right now, the regulators are trying to regulate hosted wallets. They haven't touched on hosted wallets yet, but there are proposals to go all the way there. So you really have to differentiate the concept of wallet, the whole idea of cryptocurrencies. That it's one of the downsides, I think, to mass adoption is this need to understand what a digital wallet is and the intricacies around, a hosted, an unhosted wallet, a cold wallet, a hot wallet, and everything in between. So you could have a whole other panel on wallets.
We would love to stay and discuss it, but I suspect we might be switched off. So we have run out of time. So thank you all very much on your thoughts and your participation. I hope the audience found it useful, and I hope to speak to you guys again soon.
Thank you very much, guys.
Thanks
Take
a lot.
care.
Bye-bye.
Thank you. Thank you.
Hi, everyone. Thanks for joining us. This is our last panel of day one of GBBC's Blockchain Central UNGA. This panel is on the future of work. I'll hand things over to our moderator, Stacey Warden, to get us started. Thanks.
Hi, thanks, everybody. It is not just the last panel of day one. It is the best panel of the entire Global Blockchain Business Council UNGA effort. And because, honestly, what is more important than the future of work? Everything from technology and the fourth industrial revolution to the pandemic has really driven home, I think, the essential question of this day, which is what is the future of work going to look like? And how is it going to help define all kinds of social structures that are important to us? So luckily for you, I have the world's greatest panel to talk about this, to this topic. And we are going to be very predictive. We're going to be very bold. We're going to put things out there and draw some lines in the sand about what the world would look like. And just as importantly, what should we fear in that new world, and what can governments and policymakers and regulators in the private sector and stakeholders of all kinds do to bring about that good future world and kind of help us avoid maybe that more risky future world. So I'm going to start with you, Sheila Warren, somebody who I I'm proud to know and admire greatly. You run everything digital at the World Economic Forum. You have line of sight from the World Economic Forum, from atop your mountain perch in Davos. You can see the whole world and everything that is happening below. You sit on the management committee of the World Economic Forum. So I don't want to put you on the spot exactly, but what is the future of work going to look like?
Yeah, well, thank you so much, Stacey. It's so good to see you, friend. We had a meeting a couple weeks ago of a whole bunch of big multinational CEOs of major companies, who kind of oversee, hundreds of thousands of staff. And what was really interesting was we asked, okay, a lot of you are starting to go back to the office kind of in the middle of this pandemic, which we're not through yet, of course. What are you seeing as trends? Are people excited about this? Are they not into it? And what we heard was people who were younger in their careers, more junior, or very excited to get back to an office. That's their social outlet. They want to see each other, et cetera. People who are very, very senior at the top of organizations, also excited to get back. They can get a pulse on things. They can kind of be visible leaders for their organizations. People in the middle, really not so into it. Oftentimes, these are kind of your, either your subject matter experts, your middle management kind of layer. A lot of them it's generational, is what we kind of unearth, is that people who are kind of younger in their lives, who really derive a lot of that kind of satisfaction from work, are excited about it. So I think that this is interesting because it really, I think, frames some of the things that I think are going to be important in the future of work. Namely, how do we enable people, human beings, to balance their work and family lives? When we are in a place where we've seen tremendous from the workforce, a lot of challenges that have emerged in various parts of the world, particularly here in the United States, around things like childcare, the departure of women in droves from the workplace, all these kinds of things I think are really challenging. So the number one thing that we're paying attention to here is how are we going to accommodate some of this going forward? How are we going to be able to shift to recognize that over the course of a worker's employment throughout their career, they're going to have different needs and what they need from work and what they're looking for job satisfaction, mental health and well-being, and new skill development. So a lot of that's going to wind up being automation, moving digital, accommodating periods of people's careers where they are maybe gig workers or go in and out of formal employment. We're going to see, I think, a very different model than we've ever seen before. So I'll leave it there for now. But I thought that trend was really interesting and insightful because there's no universal answer. The answer differs, right? What people need, what we're going to see is going to really vary depending on where people are in their career and where they are in their lives.
And do you, so I guess I have a two-part follow-up question. One is, do you think that the pandemic is exacerbating current trends, or do you think it is brought in kind of a paradigm shift in how people are looking at things? And my second question is, do you think that employers are attuned enough or can be attuned enough to the distinctions that you're making to sort of move forward with employment policies that can kind of extract the most value out of workers depending on what they want?
Yeah. So I'll start with the second first, and I'll probably forget your first one and make you say it again. I'm just going to warn you now.
Role of the pandemic.
I think there's a critical difference between workplaces like tech, for example, that were already really remote. There was a lot of ability to accommodate remote opportunities. There was also a sort of a more flexible project culture, right? You'd come together kind of in a matrix fashion for a project that you would maybe dissolve and go to different. So there's always that kind of flexibility. And so we're seeing a difference in adaptation and speed of adaptation in tech forward companies than to other companies. And that's not just companies that have a requirement like manufacturing or whatever, where there's a physical requirement to be in person. It's really kind of a mindset. Right. So the more digital, let's say, your company already was, the more you were able to kind of transition quickly to this pandemic environment. So to that extent, I think there is a pulling of more digitization, which I think is pretty obvious. Right. So we saw that immediately in the way that people jumped online and did things like Zoom or other kinds of web services to get things together. The amount of asynchronous, kinds of adoption of asynchronous tools, collaboration tools, like things like this. Right. So that all I think is an exacerbation of a current trend. Where I think things are new, or to kind of answer your first question sort of all in one go, anything that was a stress point or a fracture point broke during the pandemic. So we already knew that in the United States in particular, there wasn't really a great caregiver culture. Like a lot of families were barely pulling it together in terms of finding childcare or anything like that. A lot of those systems or services just completely broke down. So recovering from that is proving to be a challenge depending on where you are in the world. Some countries were way ahead on this, and so they were able to kind of go back to what they had in place before. Whereas other countries that didn't have that kind of support infrastructure are finding it to be a huge challenge. And so there, I think we are seeing a challenge in getting, women in particular, but whoever's in a caregiver role back into the economy, back into the workforce. Very challenging.
Right. And, the other overlap there is that a lot of these tech companies tend to be very male. So that also sort of has helped them.
That's right. And younger. And they skew younger as well.
Right. And
exactly.
they skew younger, yeah. Ki-Bae Kim, you are with the Korea Advanced Institute for Science and Technology, which is really one of the most impressive titles and scariest titles I've had the opportunity to say. So we're expecting some brilliance out of you for sure. But when you listen to Sheila, you have spoken often in the past about the relationships between human and machines. And when I am feeling positive and listen to Sheila, I think of machines as kind of providing that support infrastructure potentially, or an enabling kind of some of these trends that she thinks could look like a rosy world. But you have also spoken in the past about maybe some darker implications of the fourth industrial revolution. And can you maybe set the scene a little bit for your views on this, and then how they pertain to the future of work as well?
I like to focus on two points of the new trends of the technologies now. So one, the first trend of the technology is that the machines replace human beings in intelligence areas instead of physical area. So, for example, the IoT takes parts of cognition and collective action. Artificial intelligence perceives, infers, and decides instead of a person, and blockchain builds the trust that has been built by the institution or organization. So, and the second point is that similarly, the tasks of machine moves from the lower level skill tasks to the higher level skills. For example, painting and writing, very creative areas, painting and writing. So the
moderating panels.
Yeah.
Yes.
Yeah. So until now, when people and machine have settled their division for centuries between lower level machines and the higher level tasks to human beings. But so the relationship between machines and human beings are changing because of the expansion of the roles and the capability of machines. Yeah.
So how are they changing? I mean, it sounds like you said in the past, it's a little bit like we're the overlords of the machines, but is that part changing? Tell me what you mean by the relationship is changing.
Yeah. So let's consider the three tasks of in detail. The routine tasks and atypical manual tasks and atypical cognitive tasks. So atypical routine tasks is very simple, and so so machines can do the repetitive work instead of a person. And atypical cognitive tasks or atypical physical task is quite difficult for machine. Even if it is easier for people. For example, cleaning the street or just moving some boxes. It was quite difficult for machines, but now the machines are driving by themselves and moving some stuff by its arms, by itself, without the control of people. So the machines are now replacing the human beings in the unroutinized or atypical tasks. Even the mental areas, for example, so painting and writing, I told just before. So so the relationship was simple just 1 century ago. So human beings just control, and machines just follow it, and human beings do a little bit mental work, and the machines just do the physical work. It was very simple just 1 century ago, but now the relationship is now changing. So machines do everything. Yeah.
Let me push you though, because we're talking about the future, not a century ago. So what's it going to be like in 50 years with the relationship between humans and machines, would you say?
Because of the relationship change, and the machines are doing more than it did, and so whatever people is doing, so machines do everything. So in my opinion, machines will do everything what people did. So for example, physical labor. So it was very simple, physical labor and some repetitive work and some financial work and some even more difficult work. Only a person had to do. So we have to think about the relationship between people and machines. So in 50 years later. All
right. So Julie, here first, machines will do everything in 50 years.
Even panels, Stacey, like
not
this?
Not the moderating, but I will be
irreplaceable
for machines. You don't know. You are in the business of placing people. So first of all, and I don't want to make this whole panel about kind of the machines taking over. So more broadly, incorporating some of the things also that Sheila talked about. What, in terms of the future of work, balancing these things, what are you seeing? First of all, what is your view? And second, what are your kind of clients telling you? What are they worried about? What do they want in their workplace going forward? What are the employers that you work with looking for and insisting on? And then if you could incorporate a little bit this machine element to paint the future picture for us.
Sure. Well, look, first of all, thank you for hosting this in GBBC, and it is a really important topic, and certainly one that in our firm we think about a lot. I know we're not supposed to agree with our fellow panelists, but I do agree with what a lot Sheila said. So sorry about that, Stacey. But sorry.
I had one rule. I know.
I'm violating it right away.
It's just so compelling.
Absolutely. But I will expand upon it, right? And what I agree was we're all trying to advise our clients and even figure out ourselves here at Heidrick, how do we return to work and why do we need to return to the office, right? I would say that, one of my personal concerns is that in businesses and services where it's an apprenticeship model, right? Whether it's law, consulting, executive search, or anything that requires collaboration, I think our younger generation colleagues are missing out a bit, right? Because, we learned by observing, right? By tagging along. Some of those random generated moments by the proverbial water cooler is what we're not experiencing right now. Now, I personally love this model right now because it's super efficient, right? I've cut out 2.5 hours of commute. I can do back-to-backs and then, do other things like walk the dog, right? But I do feel we're shortchanging some of our colleagues who may not see those things that we benefited from when we were sort of rising, the ranks. Now, just to turn to sort of the broader question, in the past 10 months, we've surveyed over 100,000 respondents on corporate culture. Many of these are CEOs, C-suite, CHROs, and over 90% of the survey respondents said that the most important things on their mind are purpose and direction in terms of driving a thriving culture, right? And that's, I know, a whole separate topic that we could spend hours on, but I think the takeaways there really, Stacey, are, leaders are very concerned about how to, in this, as we start hopefully emerging from this pandemic, what does the future of the workplace look like, right? How do we build and maintain our culture to adapt and to sort of take some of the benefits that we've all, the silver linings that we've had, but not forget some of the things that made us, who we are and successful. So we're in frequent conversations with CEOs. Many have indicated that is their top challenge, to find ways to keep their employees connected, focused, while still operating in a semi-remote fashion. So a few takeaways, and then I'll pause and maybe address the machine side.
Before you do that, though, can I just make sure I understand what you're saying? Are they saying that remote is here to stay, and therefore they have to think about culture in a remote, or do they think this is sort of a temporary phenomenon and we'll go back to the way we were?
Yeah, and again, as always, Stacey, it depends, right? Depends on the industry, depends on the workforce that you're talking about. If you're in a manufacturing environment, it's a little bit harder until the machines take over and build everything for us, right? But until such time, which I don't think personally will happen ever fully, those workers don't have that luxury, right? If you're working in a meat processing plant, you got to show up. Now, in more, services and other professional services environments, I think that is still the debate that's going on right now. We are coming up with maybe a suggestion that you have purposeful kind of coming together, right? So, whether it's 2 days a week, 3 days a week, if you do show up, let's make it count, right? Let's increase the chances of those random moments, which are so important for mentoring and for learning for everybody.
All right. Now, you have a couple of takeaways, and I have not forgotten, but do you want to mention quickly? And then...
Yeah, I mean, they're not, look, I mean, I think most people are already doing this, but again, I think CEOs are again, focused on organizational purpose, right? And that can dovetail into another discussion around diversity, equity, inclusion, right? Yeah. But the getting back to the purpose and the mission of an organization is really fundamental. Okay. Over-communicating, right? That's really important. That's the most critical connector for employees. Frequent, authentic communications, two-way dialogues. And then finally, just doubling down on developing inclusive leaders, right? Who are going to be proactive about engaging teams and recognizing contributions. I think some of those tools and suggestions are that we're trying to arm our clients with will hopefully help us all get through some of this disruption and come out in a stronger way.
Okay. And I appreciate that. And especially I appreciate the way that you're sort of teeing me up for Rutger here, because I think the themes, Rutger, so far have been a little bit about sort of the displacement of humans potentially by machines. And then what does kind of the working, the mechanisms of work going to look like, and how can you kind of, and I want to do a little bit more on this, how can you build that kind of culture? But you, I'm guessing, would argue that we're thinking about this a little bit two-dimensionally in total. And so can you tell us why the whole paradigm maybe that we've been operating under so far is maybe not quite sufficient, and take us to the metaverse as it were.
Yeah, sure. Thank you, Stacey, and thanks everyone for a great foundation for this conversation. I think that if we look at, let's start at the water cooler. I think if we look at the metaverse as the the internet, not of pages, which we know now, but the internet of places, where we don't focus on content, but we focus on activities, then we can see that this emerges from the gaming industry, of course, where a lot of people are already doing a lot of activities together in the same space. And we see that for over, 500 million people on the planet, across all ages, the water cooler is there. So what we have witnessed ourselves, like we transformed from an event-driven company to an online software ecosystem where we are building a Web3 metaverse stack for collaboration. And what we see is that companies need to really make...
Did you just say a Web3 metaverse stack for collaboration?
Yeah.
You got to tell me what that means. I'm sorry.
Sorry. So imagine a space virtually where you can come together with everyone of your liking, of your choosing, and where you can gather, collaborate, achieve results, where you can build your own space, so to say, in which you can collaborate on challenges and projects across organizations, communities, and individuals. And that's an internet native working environment where you can have a lot of fun as well, and where you can work from different paradigms and such. So what we see in a new field of work is that what the opportunity really is that the world is boundless, and that organizations are boundaries thought of by people that are limiting, right? And what we see is digital native organizations in the form of DAOs, of gaming communities that have no boundaries, and they operate across space and time. And that's incredibly powerful to see that actually happening, to see the people meeting each other, to see them working on projects and certain solving challenges together, whether it's in the fields of energy or logistics, supply chain, healthcare. We are seeing that each day, and we feel that there's a new, let's say, paradigm emerging where it doesn't really matter if you're at the office or at home or even traveling remote, as long as you are able to contribute. As long as you're able to participate, then you can find meaning in your work. And I feel that's where, especially younger people are also very strongly attaching to, and at the same time that a lot of people are looking for that in a world that is kind of where there are more questions than answers at the moment, right? So.
Okay, but I because while you were playing all of these video games, Sheila and I were reading economics and legal papers. So
It's
interesting. It's interesting.
No crash.
I'm not a gamer at all, right? I do like to play offline physical games on the table with friends, but I'm not a gamer at all. So during COVID, we were supposed to have. I mean, I remember going to Davos in January 2020, and we were planning for our hackathon with 2,000 people from 50 countries in April. Well, of course, that couldn't happen. I was very skeptical. I was very reluctant to organize an online hackathon because usually those experiences suck, right? And then after postponing twice, I said, okay, I have to do it online, but it has to be epic. It has to be productive, effective, and we have to be able to accommodate 2,000 people from 400 organizations altogether in the same space, collaborating according a certain structure. I mean, we haven't been really into legal papers, but we have been in writing source code to make such a space happen, so to say. And what we learn from our clients, mostly corporates and governments, that they want to explore a world that takes away the boundaries of organizations and the way we used to do things to a place where we could kind of rethink everything and then crystallize it into the reality of today.
All right. Those are thought-provoking last words. Sheila, you wanted to jump on the back.
Yeah, I was going to say, Stacey, so I had our friend Bill Tai on the Money Reimagined podcast. Michael and I had him on this week, and he made a comment I thought was really interesting, where he said,
as he often does.
Well, exactly, no surprise there. He said, we've all been part of the metaverse during this time. We're all virtual right now. You don't know where I am. I could be anywhere. Am I wearing real lipstick or Zoom lipstick? You don't know. So we've all had to experiment, I think, regardless of generation, if we are knowledge workers, if we are in kind of a environment, again, a more tech-forward environment or digital-friendly environment that has engaged some of these tools in the metaverse, and we don't necessarily think about it that way. We tend to think of like actual avatars, cartoons, like that kind of thing, right? More of the sort of traditional sci-fi snow crash kind of experience. But we all are doing it every single day. And I think a lot about some of the memes of like people who are presenting on the news, and they show like from the side, their photo is like they're on a ball and they've got shorts on, and that kind of thing, right? There's a cat sleeping somewhere, like mine's right here, So I think that this adjustment in how we present ourselves virtually, our digital twin, is something that has accelerated. So this was something that was already happening a lot with digital natives and crypto natives. But with, I think, people of, Gen X or even boomers, there's had to be this thought put into how do I present myself online, which is really the gateway, I would say, into kind of the metaverse that I think would have been a much bigger psychological leap for maybe older generations, including myself in that, in a previous time pre-pandemic. So some of the trend I think we're seeing is towards understanding that our identity composed, it always has been, but even more so, it's now consciously composed of all these different layers. Some are digital, some are in person, some are a hybrid of those two things, people that we know, in real life, we also interact with mostly online, all these kinds of things. And I thought Rutgers' point, just you mentioned briefly about DAOs, is really fascinating because we're also experiencing with how we define community. Now, those of us who have been online for a long time, have been doing kinds of things since, I was online in college in the very late 90s, by the way, just for the record. But we were doing a lot of this, some of us who are more the geek types anyway. But now, that's happening all the time. And so we're thinking about how do we pull communities together? What is the purpose? How do we guide and structure those communities? And I'm finding personally the DAO experience and what's happening in those communities to be something that's going to pull over into community management within companies, whether it's ERG, whether it's about inclusion strategies, whether it's about adopting some of the ways that we're trying to amplify voices and be more democratic in how we organize communities that DAOs are demonstrating for us. I think that's going to flow into the workplace. We won't call it, employer DAO or whatever, but there will be elements of that mentality, that an organizational structure that emerges that I think are going to be pulled over. I'm already doing it with our teams here at the forum.
Yeah, I think.
Let me throw a question out, a couple of thematic questions for all of you. Maybe, Julian, maybe I'll start with you and Kibe, but anybody can kind of jump in. Some of the problems with sort of the AI and the algorithms and the communities that were meant to open up democratization. So Airbnb is a very good example. Say it was going to sort of disrupt the hotel or industry, and anybody could then participate and be a hotelier and et cetera. But what ended up happening is a little bit of, African Americans get excluded from this, right? They're sort of not chosen as much to be in your home. The African American homes are not chosen as much to go to, and it kind of just amplified exclusionary tendencies that we already have. Not to pick on Airbnb, because there's a lot of examples that you could use. And what I worry about is if you create these kind of digital things and it makes it very interesting and very easy to join, it also makes it interesting and easy to put up barriers to entry. Who's managing that, and how do you think about inclusion, but not just of sort of like people, and to what extent are we worried about that? I toss that out to anybody that's interested, but Kibe, you're leaning forward, so I wonder if you have something to say about that.
So if I tell you first the conclusion, then what most counts is the inclusiveness, of course, and what we should think is about the inequality. So because the new technologies and the fourth industrial revolution concentrates the rearrange our focus to from labor to capital. So the fourth industrial revolution and the AI, some technological advances are now transforming our society to more capital oriented. So the capital, more capital produces better performance, and better performance produce reap more capital. So we will look at the positive feedback between capital and machines, and capital. So the richer who can invest the capital in machines can get richer than faster than ever. Right. So we have so the only area human beings could compete with against machines is now narrowing. So we have to think about the inequality between the capitalists and the laborers. So against machines. So we should design our future more inclusive, embracing the inequality.
How are we going to do that, Julian?
Yeah, so I'll just add to that. I mean, I think it was referenced earlier that, the reality is the tech industry is male dominated by non-diverse males. And therefore, I think we have to be extra mindful that improper coding, algorithm development results in some of these negative externalities that you just referred to, Stacey, right? Unintended consequences, hopefully unintended. So that ties into a broader discussion around diversity and the business imperative, right? And the social justice implications as well. So I can say that, on the positive side, that certainly here in the US, inclusion is a top leadership priority, right? And that's, was catalyzed, unfortunately, by the murder of George Floyd and anti-Asian hate and many of these other social, sort of earthquakes that have occurred in the past 2 years. But it is a top leadership priority. It's a business imperative. I think the future leaders, our clients looking to are really thinking through that and creating frameworks that you can have authentic belonging, valuing differences, encouraging diversity. And I think, again, the research has borne it out. It's not just, again, the right thing to do, it's also the smart thing to do, right? When you look at boards that have better gender representation, when you look at C-suites that have a more diverse background of thought, not just ticking boxes and different, colors, literally and figuratively, but really diverse thoughts and experiences, you genuinely get a better result, whether it's more alpha, better products, et cetera, et cetera. And so that's the fundamental beginning, right? You have to have the right people, the right backgrounds, who then create some of these outcomes, whether it's coding, whether it's these algorithms, or whether it's important decisions around product development or services, et cetera, et cetera.
All right, I want to bring this before, or the GBBC is not going to let me moderate a panel ever again. And Rucker, I'll start with you, but I want to bring this back to blockchain technology and the digital infrastructure more broadly, and how, what role that will play in the future of work, and what role can it potentially play to make sure that we create this kind of freer and more inclusive future for work. Rucker, I know you had something else to say, but if you can kind of bake that into.
I can. Yeah, I can. Yeah, I think it's all about, and same with public blockchains. It's all about community. Every company, whether they know it or not, is a community company, right? And the question is, if you think about the value output of a community, then you can think of, what if I was a country? Would people like to live there? And can people visit, right? And do they just buy something, or can they participate and contribute? So what we're seeing is the world opening up. What we're seeing is that innovation processes, organizations are opening up, and the organizations we are seeing that are very well able to connect with their stakeholders, whether it's their clients or future generations or nature, are able to better define the challenges from multiple perspectives. And the problems that turns into opportunity fields. And the more people you can involve in operating that opportunity field and basically look for answers, look for solutions, look for ideas, and create them together, the more value you create. And it's what Don Tapscott coined as Wikinomics, how collaboration with everyone changes everything. And I think we're on the brink of a massive age of creation instead of age of consumption, because a co-creating consumer is worth a lot more, not just in financial terms, but in all sorts of things like social capital, maybe environmental capital. But we have a lot of people standing along the sidelines at the moment. Well, what blockchain can do is really take away the friction that we now experience in the banking system, for example, when doing transactions. But that's let's say the thing we already know. What I think is interesting is that we can have different forms of capital, like social capital made explicit, like artistic capital made explicit now in the NFT space, and build communities on top of that, right? So each NFT piece in a collection is a community. So I think being able to build on top of that, so really flip the pyramid and see everything as a starting point instead of an endpoint you have to buy, for example, that is the real thing. It's what Bowie mentioned in the interview, the famous interview with Paxman in '99. It's yeah, if you just consider your client as a consumer, then that is a very limited view of what you can achieve with that client. So, and that is also the same thing with your employee. I mean, Steve Jobs did it with his App Store, right? He turned all the consumers into co-creators.
That's a very, that's a very interesting point. Of course, easier and more transparent on a blockchain. Kibe, that's a pretty benign outlook there. And did you want to rain on that parade at all, or do you think do you buy into what Rutger is saying, that this will enable inclusion, or do you think, or no?
Yeah. So what is I like to tell so we can just enjoy our life, enjoy our work. So it is not so disastrous. So what we are facing is just a change. So we can be a noble man on top of the economy, which is built by blockchain automates the economy. So even without human beings intervention, so they can build their money, accumulate their wealth. So we can just imagine the nobleman's life in the ancient and middle age. So
all right. Sheila, I want to go to our lightning round because we have about 5 minutes left, but do you have, Julian, did you have anything on blockchain per se, or can I go to, So Sheila, first of all, I want to give a shout out and a little bit of a push for Money Reimagined, which is a terrific podcast. So anybody that is interested in learning more about these things, I highly recommend Sheila's podcast. So Sheila, starting with you, I want to ask each of you 2 questions. One is, what can policymakers do? I mean, we have talked about kind of a scary world and a more inclusive, digitally enabled world that recognizes different kinds of workers and different kinds of tasks. And I think the underlying assumption is there that they will be happier and more productive, and et cetera. What can policymakers do to help us? The one thing, I'm giving you one thing to bring about this world. And then more broadly, what do you fear? What is that kind of world that keeps you up at night and makes you the most worried? And I'll ask all of you that question, kind of going around as I see it on my screen, starting with Sheila, then Kibe, then Julian, and then ending with Rutger.
Yeah, well, of course, I have to go first. Thanks, Stacey.
Well,
These are great questions. All of you have time to think. Fantastic. But this is actually the easiest answer for me. It's something orthodox, universal preschool. And I just think that no matter where you're working or how you're working, you cannot work and care for a young child at the same time. It is impossible. And I know because I do it on a frequent basis. It is literally impossible. And so that leads to, I think, my biggest fear is that we're going to see continued attrition of women from the workplace, particularly as they become mothers. We've seen the statistics, I don't have them in front of me, but they are atrocious. They're absolutely appalling, especially in the United States. Scary. Very scary. So that's my big concern. And I think that the solution to it is really providing access to more people, who are less resourced than I to childcare for young children.
Okay. All right. Kibe, policy and fear.
So I like to suggest some change of the training of the work of human beings to work. So first, the people should be more ethical to enjoy our new work, and the institution should be inclusive. To reduce the inequality, for example, and our society should be, and the business is more responsible to consider the environment for our society too. So this is our political orientation next time. Yeah.
Okay, and what do you fear the most? And I did notice that you said 3 things, and I only gave you 1. But what do you fear the most?
I have no idea about the fear. So yeah, but also what I fear is the loss of the humanity when the blockchain or artificial intelligence IoT just cover the earth. So yeah, this is what I concentrate. So to be human and to remain as a human.
Okay. Yeah. Okay, Julian.
Well, look, on the policy side, I'm going to tie it to GBBC and sort of the theme here, which is I do hope that regulators around the world, and maybe especially here in the US, begin to provide some clarity in terms of the regulatory framework around blockchain and crypto. And, especially I think we've seen here in the US of late, a lot of running battles between SEC, Gary Gensler, and some of the more prominent crypto exchanges. And I just fear that unless we have enlightened kind of policy direction and clarity, the party's going to end before it's getting even started. I really do. I'm very quite concerned about that. We do a lot of work for crypto companies, and we're in the thick of that. The fear, Stacey, I would say, my short-term one is really the impact on mental health with everything that's been happening in the last 18 months, and the sort of things that will continue from that. We see a lot of burnout across a lot of organizations. And I was speaking to a colleague in Australia. I couldn't believe they've been under 6 lockdown, right? I mean, it's just, at some point there is a breaking point, and we're going to be dealing with some of those implications. But then a broader fear is climate change, right? I mean, that's, we could be creating wonderful metaverses, but if there's no planet to actually, still be part of, that's going to be really concerning. So I hate to end on such a negative note, but those are things that keep me up at night.
My greatest fear is that none of you understands what the word one means. Okay, Rutger, except for Sheila. So Rutger, what is your one policy priority and what is your one fear for our last lightning, as I remind you as well, around?
Yeah. So let's start with the idea that the metaverse could help us come together and solve climate crisis and climate change. So, but policy making, yes, what we see is a lot of collisions between different paradigms. There is paradigm that is rooted in the past century, and that there's a new paradigm emerging, and you see policymakers struggling between the two of them. And I would urge that policymakers create paradigm bridges and build those bridges as where new solutions can come from that we don't yet, right? So turn on an exploratory mode while creating the policy with all the stakeholders to get to better state, instead of just hanging on to certain old paradigms, right? So that's
Can you make that a little more concrete, though?
Yeah, I mean, you see it in crypto, right? Should we protect the investor, or are we protecting the status quo?
Okay, yeah.
Right. Mm-hmm. So that's the real thing there. Mm-hmm. And in a very uncertain world, we can observe that institutions tend to protect themselves and the system they are operating in. And what we really need is to move beyond that and agree that there's a completely new world out there which we can explore, and where we can make. What are you afraid of?
And what are you afraid of?
I'm afraid that let's say we cannot get beyond the paradigm collisions altogether, because we keep defending our own paradigm, whether it's the new one or the old one or the one in the middle, I don't care, but that we break through our own bubbles of what we think is right. There can be a Bitcoin maxi across me or a CBDC maxi over there, and both think that they are right. So how can we get it right together? And that is the thing that I'm not afraid of, but I would urge to get towards that.
All right, so all UN governors and important people listening to this panel, I know that you all are. We need much better regulatory clarity and forward-thinking regulatory environment. We need universal daycare for workers for the future of work, and we need a more ethical society to help us navigate through the future. So I would like to thank my amazing panelists for such a terrific session, and thanks everybody for tuning in.
Thanks also much.
Thank you.
Thank you.
Thanks.
Thanks also much for joining us for day one of GBBC's Blockchain Central UNGA, and to all of our panelists on the last panel. Very lively and always a pleasure. For everyone, we'll be back tomorrow at 9 a.m. Eastern Time, September 17th. So we hope you'll join us.
Don't miss it.
Thank you.
Yeah, thank you.